where I would go here. I mean, you just have no idea as to the duration here. There's really nothing like what analysts like to do is benchmark it against, similar types of events, whether it's the 2008, 2009 crisis or something like that. But as the title of the headline reads, it's really flying blind here.
Well, there is that element, no question, when you have so many companies pulling back their projections, not really able to quantify the extent to which the coronavirus is going to hurt their results. So, I mean, it's clear that any precision in the company estimates or in sort of the broader S&P 500 forecast you get out of it is going to be limited at best. So, all you can do really is kind of get a sense directionally of what's going on. And it's clear that things are going to be a whole lot worse than analysts were anticipating. Now, that 14% drop I talked about with Barclays, if I go through the latest figures out of Bloomberg, I mean, pulling together the analyst estimates for S&P 500 companies and coming up with an overall figure, there as of last Friday, and that was only a 1.7% decline. It just shows you how much of a gap there is based on the lack of precision when it comes to making forecasts here.
Certainly, the phrase of the moment is flying blind, and that's certainly when it comes to earnings and when it comes to how quickly the U.S. economy and the global economy, for that matter, will recover from this. One area where there is some certainty is the Federal Reserve, which is throwing the kitchen sink at markets, and there's sort of this conundrum right now. How much do you care about fundamentals, and how much do you put your full faith into the fire hose that is Federal Reserve stimulus as its balance sheet balloons and as it commits to doing a whole host of unprecedented actions to prop up the markets?
There is an American company.
There's no doubt that's part of the mix as well. I mean, when you look at what's happening potentially with fiscal policy as well as monetary policy, that's part of the mix. The idea that industries are going to get help from the government that have been suffering. We had Southwest Airlines come out today and say that they're going to be lining up to get some of that $50 billion that's been allocated for passenger carriers. American did that earlier this week. Now, the airline stocks are actually off a bit at the moment. Nothing like what we've seen lately, but Southwest is down 1% and American's down 0.5%. So, not exactly a sign of recovery, but at the very least, you can see that fiscal policy as well as monetary policy is going to be key in terms of where companies' results are headed here.
Dave, are you surprised at all that market's kind of not even really blinking that much here on this 6.6 million jobless claims?
Well, I mean, there again, you want to talk about flying blind. I mean, it's clear that the economists are doing it, not just the equity analysts in a sense, because, last week's number on claims was higher than a lot of people were anticipating, and this week is more so. At some point, you just have to realize you're dealing with something you haven't seen really in the history of the data, and just say, okay, here's where we are. And so arguably that would explain the reaction we're seeing here.
Dave Wilson, Bloomberg Stocks editor, thank you so much for being with us. Very hard to get your hands around what's going on, Paul. It's bad. The numbers come in. They're really bad. They're worse than the worst estimate. And frankly, I got emotional looking at the numbers because they were that bad. And, everybody knows somebody who has lost a job and doesn't know where their income is going to come from. And you just look at that and you think, is this temporary? Will a gap in income just be plugged by the federal government and then everything will get back online? And increasingly people are saying that seems unlikely, and yet it does seem like these companies are viable businesses and we're really strong heading into this. How do you pair these things? I'm having trouble wrapping my mind around it, Paul.
Yeah, absolutely. And I think it comes down to economic forecast, Lisa. Is it a V? I think most people are kind of throwing that out the window and now kind of hoping that a U-shaped recovery is the best case scenario here.
There was a story about how economists are debating whether it's a V, a U, an L, or a W. A Nike swoosh is getting Nike whoosh is getting some popularity. Somebody suggested an ampersand. Right now, let's head down to Nathan Hager for World and National Headlines.
Thank you, Lisa. The numbers of the coronavirus pandemic itself are staggering. The COVID-19 is on track to infect 1 million people around the world by the weekend. The U.S. now has more than 216,000 infections, more than 5,100 have died, and states are still clamoring for tests and much-needed medical supplies. In hardest-hit New York City, former police commissioner James O'Neill's been named a voluntary coronavirus supply czar.
Yeah, I'm going to be looking at sourcing. I'm going to be looking at transportation, distribution, making sure the supplies that we do get go to the hospitals that are in most need.
And in an MSNBC interview, Senate Minority Leader Chuck Schumer of New York called on President Trump to name someone from the military as a national supply czar. Schumer says the current person in charge, trade advisor Peter Navarro, isn't the right fit. The president responded to that on Twitter, saying he already has an admiral in charge of supply distribution. He suggested Schumer should stop complaining. We'll hear more about the White House's response to this pandemic. Vice President Mike Pence sits down for an interview with Bloomberg's David Westin at noon Wall Street time. You can hear it on Bloomberg Radio or watch it on Bloomberg Television. China is hitting back at a U.S. intelligence report that Beijing intentionally covered up the extent of its coronavirus outbreak. White House National Security Advisor Robert O'Brien.
Unfortunately, we're just not in a position to confirm any of the numbers that are coming out of China. There's no way to confirm any of those numbers. There's lots of public reporting on whether the numbers are too low.
The Chinese Foreign Ministry spokeswoman says Beijing's response to COVID-19 has been open and transparent. She says the U.S. is trying to shift blame. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
Why can't you just go to some remote island and wait till all this is over?
The range of outcomes is so wide.
Because it's your job.
What do you think some of the structural changes might result?
Fortunately, it's our job too.
How's the value done in this market?
Paul Sweeney and Lisa Abramowitz.
It's very hard to make a forecast.
Bloomberg Markets.
This could be a lower for longer type of hit.
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America.
People are ready to go out and dine
Ad Council.
that there are restaurants to go.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance? Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business Radio.com and iHeartRadio apps.
Vacation
and
travel
at Bloomberg
eventually will return because nobody's going to take a vacation on Zoom.
The world is listening.
But he is worried about corporate travel.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for me to talk to someone about it. I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/OurStories to learn more. A message from the Alzheimer's Association and the Ad Council.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
Glenn,
This is a vital update
what
from
do
the
you make of
government
the new
about
CARES Act
coronavirus.
from Congress,
To help
and
save
how much
lives,
relief
stay
will
at home.
it provide to
Anyone
you
can spread
potentially and
coronavirus.
to your industry?
Only leave your home
like
for the
hotels,
following reasons:
obviously,
to
like
shop
the
for basic
airlines,
necessities,
is more needed.
to pick up medicine, or to provide care to those who need
Let's
it,
start right away.
to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
London, it's time to play Find Unlimited. Get ready to play from wherever you are because we're bringing the game to you. Vodafone and Samsung are giving you the chance to win one of thousands of tech prizes, including the new Samsung Galaxy S20 Ultra 5G. What will you find in your area? Play between the hours of 11 a.m. and 2 p.m. You'll have to be quick. Register now at findunlimited.co.uk.
Listen to Raj go. Polyrhythm, paradiddle. A drum solo so epic, he nearly forgot his mom's birthday back in Delhi. Good thing Raj has Western Union on his phone and can send money quickly online. Download the app today. This service is provided by Western Union. FX games apply.
The moves may be choreographed, but the drama is real.
I dare you! I beg you to come down here right now!
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown, check out the What's Wrong with Wrestling show. And for a pro wrestler's perspective on life and culture at large, listen to Talk is Jericho. For these and more podcasts, search sports and scroll down to the world of wrestling.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
We all hope that's the case.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
And they're letting people in only if they're willing to give up certain elements.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
So that I can then travel to certain places. That may be a
markets, headlines, and breaking news 24 hours a day at Bloomberg.com. The Bloomberg Business app on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
The S&P is edging just a bit higher after futures earlier raced overnight gains following jobless claims that doubled to a record 6.6 million. The data indicated few sectors of the economy will be spared. The benchmark is down about 6% since just Tuesday as investors grapple with valuing stocks amid the deteriorating data. Treasuries dropped and dollars up. We look at those numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P's now up 0.5%, up 12. Dow's up 0.25% up 56, and the NASDAQ is up 0.3% up 21. The 10-year is little changed with a yield of 0.58%. West Texas Intermediate crude surges on news that China will be stockpiling. It's up 8.6% at $22.06 a barrel, while COMEX gold is up 2.5% at $16.3120 an ounce. The dollar down 107.40. The euro's $1.864, and the British pound $1.2382. JP Morgan Chase & Company CEO Jamie Dimon says he's back at work 4 days after emergency heart surgery. Dimon says he feels fine, and like so many of us, he's working from home. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Paul, the number that came out today was devastating when it came to the jobless claims. 6.65 million jobless claims, blowing away the previous record set last week week of 3.1 million claims, which was revised upward. The picture is bleak, getting bleaker, and it's dramatic and it's painful, and the human stories behind these numbers are devastating. Yelena Shulgetova, senior U.S. economist for Bloomberg Economics, joining us now. Yelena, when you dig into these numbers, what do you find when it comes to the job sectors that are disproportionately affected?
I don't know how clean they are.
Good morning, Lisa. Indeed, we are really lucky to be employed in this situation and working from home, but a lot of people out there, especially small businesses, are devastated by this situation. So the extraordinary increase reflected in today's numbers in jobless claims. This number is not only showing the inflow of new layoffs, but it is also showing a catch-up in application processing. People were just filing for claims, but the labor departments were not able to process all the claims in filing. So we will continue to see these numbers going forward for several weeks ahead. And if we see these numbers in the vicinity of 3 to 5 million, persisting,
Glenn, you have a lot
the
of
unemployment
cash on
rate
your
will
balance
climb
sheet. I'm
towards
wondering that in this type of
something like
environment,
15%
will you
in April.
look for opportunities here to acquire
I
smaller
really think
travel
this
companies, as many say that they're not going to be able to keep the doors open?
Precedented.
It's certainly a strategy you've used in the
at
past.
this point, making economic forecasts is a very difficult task.
So, Yelena, that's unfortunately kind of where I think most people want to go, is try to get a sense of, I guess the second quarter, how that might shake out. We know it's going to be bad. We've seen numbers as GDP contractions, 20%, 30%. And then a lot of people had it kind of bouncing back in the third and fourth quarter. Given kind of just as Bloomberg Economics right now is trying to digest this number this morning, just give us broadly, you don't have to give us the exact numbers, but broadly how you think economic growth and contraction might look for the remainder of the year.
So I think we will not see a V-shaped recovery and not even a U-shaped recovery at all. I think we have already kind of crossed to the point of no return for that, and I think that we'll see very, very slow L-shaped sort of recovery going forward. Yes, when this is over, and luckily we will have the cure for a vaccine or some medicine for the virus, the economy will slowly go back to normal. But a lot of things, I think, have been changed, and it's a structural change in my view. I think we will not go back cruising or going out as much as we used to.
Positive morning so far
I
for
think
the broader markets. What's coming up later today on the Big Mad Money Show?
All right, well, we have Okta, which
in terms of payroll numbers, remember that we have payroll numbers coming out at the end of this week tomorrow. The numbers for March will just only catch the front page of the economic shutdown in response to the pandemic. April numbers will be mind-boggling, probably, with millions losing jobs
because of everything else, including, of course, the closing of that.
I'm looking right now at just some of the breakdown of the state numbers, and you can see the states with the highest number of filings: California with more than 1 million, Pennsylvania with almost 800,000, New York with almost 450,000. I mean, these numbers are just mind-boggling. Also, Michigan and Ohio seeing some serious numbers coming out there. Can you elaborate, Yelena, what you say, that you do not see people going cruising for a very long time, that you don't think services will recover for the foreseeable future? Why not?
Well, because think about it in terms of the financial crisis or September 11th. So that changed a lot of things for us permanently, and we just we will not go back as easily as we used to into a lot of these things. Because people, even if we get the vaccine, even if we have the cure, people will be afraid to do that. And over time, we might get back to that, but right away. So let me give you an example. I'm a board member of Money Marketeers of New York. It's a non-profit organization. we canceled all the meetings for the rest of the season. So who knows? We will probably go back to webinar, sort of set. So people will not easily go back. People will be scared for a very long time.
Elena Shiletu, thank you so much for your thoughts there. Elena Shiletu, the senior U.S. economist for Bloomberg Economics, giving us her thoughts and the thoughts of Bloomberg Economics on these just historic jobless claims numbers. Lisa, 6.65 million. Put that in addition to the 3.3 from last week. That's 10 million Americans filing jobless claims just in the last 2 weeks, which is historic and unprecedented.
I gotta say, I don't know if I totally agree, because I can't wait to go to a bar with my friends and give them all hugs and to get together and see people in person. I don't know. I can't wait until this is over. Yeah. And we can avoid with throw the social distancing out the window. So maybe I'm an anomaly, but
right.
Just throwing that out there.
We'll have to see. Yeah, exactly. But we'll say, I think most people now are just kind of looking for when is this thing going to peak, or is apex, as the governor Cuomo says. We'll have more on that coming up. This is Bloomberg.
Annuity payments into the cash you need for a new car.
This is Bloomberg Money Minute. The number of unemployed Americans soar, and that's weighing on stocks, which are little changed. The number of Americans applying for unemployment benefits more than doubled to a record. A total of 6.65 million people filed jobless claims last week. Boeing will offer voluntary buyouts to its entire staff of 161,000. The move will preserve much-needed cash at Boeing, which is facing a sharp contraction in demand. There's no telling when carriers will return to normal schedules, no less buying planes. Southwest Airlines said it would apply for federal aid, becoming the second carrier to confirm it will seek assistance. American Airlines already said it would apply for aid. And oil company executives reeling from the massive drop in prices will be meeting with President Trump at the White House tomorrow. Leaders from Exxon, Chevron, Occidental, and Continental Resources will be on hand, sources tell Bloomberg. Crude jumping more than 8% to $22 a barrel. Courtney Dunhope, Bloomberg Radio.
Listen, as a hiring manager, I've got to tell you, the best job candidate isn't always the typical candidate. Sometimes they're a grad of life.
Meet the grads of life. Young adults of unique determination and experience. Ideal fit for your company in an entry-level position, internship, or mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
Sometimes the best candidates aren't the ones you're used to.
Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and gradsoflife.org.
The Bloomberg Business of Sports podcast. How did the Yankees become this mega valuable team? Where the money is flowing inside sports around the globe.
From the marketing perspective, where are the dollars spent?
From union heads to team owners, Scott Soshnick and Michael Barr speak to the names that power this multi-billion-dollar industry. Boston Red Sox CEO Sam Kennedy.
National Hockey League Commissioner Gary Bettman.
Bloomberg Business of Sports. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine, or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
London, it's time to play Find Unlimited. Get ready to play from wherever you are, because we're bringing the game to you. Vodafone and Samsung are giving you the chance to one of thousands of tech prizes, including the new Samsung Galaxy S20 Ultra 5G. What will you find in your area? Play between the hours of 11 a.m. and 2 p.m. You'll have to be quick. Register now at findunlimited.co.uk.
And you should be sat in traffic all day. Sit on the edge of your seat tonight with Sky Star.
Let's get something straight. It's my mission to protect her.
Stay in for an action-packed night with Terminator Dark Fate.
We're in danger, and we'll mess you up.
Watch the latest movie straight from the cinema.
I'm going to help you protect the girl.
Terminator Dark Fate. Available now in Sky Store.
We don't win this one, it's all over.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The moves may be choreographed, but the drama is real.
I beg you to come down here right now!
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown, check out the What's Wrong with Wrestling show. And for a pro wrestler's perspective on life and culture at large, listen to Talk is Jericho. For these and more podcasts, search sports and scroll down to the world of wrestling.
It's TuneIn Sports on this day, April 2nd, 2019. OKC guard Russell Westbrook becomes the second player in NBA history to have 20 points, 20 rebounds, and 20 assists in a game.
First time since 1968.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Let's watch for the tweets, and I'm surprised that normally that's the way he does things, but the tweets will be forthcoming.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up here on Bloomberg Markets, if you want one more thing to worry about the pensions, which now are facing a severe underfunded status. We talk about that with Aaron Brown, former head of financial market research at AQR Capital Management. We also talk oil with Stephen Shork, president of the Shork Group. Right now, let's talk some numbers. Greg Jarrett has those for us. Greg.
Thanks, Lisa. That's what I needed. Another thing to worry about. The stocks are up.
Anytime, Greg. Got your back.
You're a giver. Stocks are up, boosted by energy shares as oil rallies. China has unveiled plans to increase reserves. Treasuries are down, and the dollar is up. We look at the numbers every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 is now up 1.7% of 41. The Dow's up 1.7% of 340. And the NASDAQ is up 1.2% up 90. The 10-year is down 1/32 with a yield of 0.58%. West Texas Intermediate, as we say, has been surging. It's up nearly 15% at $23.30 a barrel, while COMEX Gold is up 2.5% at $16.32 even per ounce. The dollar yen is at 107.64. The euro $1.863, and the British pound $1.2390. Now, even as the jobless claim soars, you've been hearing about companies around the globe are capitalizing on investors' thirst for debt by moving ahead with larger and riskier bond offerings. T-Mobile is bringing what could be a $10 billion offering, one of the biggest this year. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Bloomberg opinion, informed perspectives, and expert data-driven commentary on breaking news.
It is 10:33 on Wall Street, time for Bloomberg Opinion. Joining us now is Bloomberg Opinion columnist Aaron Brown. He covers all things for Bloomberg Opinion, former chief risk manager at AQR Capital Management. Aaron, thanks so much for joining us. Really fascinating column you have out here, talking to us about how the coming pension fund crisis will play out in the world of COVID-19. What are the key takeaways?
what's going to happen.
Well,
what's happening right now might be something that would create
one new thing to worry about. I can't do much about the
quarter,
virus, so I'm spending my time thinking about what the world will look like.
We're like everyone else. We're looking at various models.
And one of the things is, pension fund crisis has been looming for at least 2 decades, maybe 4 decades.
Based on our models, our
and
judgment is obviously
might be the trigger. Losing $1 trillion in asset value from equity market declines, and state and local governments being completely strapped, having spent everything they could during this crisis. The world in, say, December 2019 or January 2021, I'm sorry, December 2020, January 2021, people may look around and take a hard look in places like Illinois and New Jersey and Connecticut and say it is now undeniable that these plans will not pay their promised benefits, and we need to restructure. We need to cut benefits, we need to tax benefits, we need to kick in more money, and if you hold municipal bonds in those states, we got to get those creditors to kick in something as well, and it will be a very painful process. It will be something like what happened in Detroit, Puerto Rico, in the last couple of years, but this could be when it happens. If not, maybe we need to go another 4 or 5 years before it happens, but I think you should be at least prepared to see this happen
what the strength of the consumer is going to be once we
Aaron,
get past this
we say
virus.
with tongue-in-cheek, another thing to worry about just because it's overload right now with all of the news and the environment that we're in. But you raise a really important point. It's something people have been worried about for years with escalating concern given the blowing out potential obligations of some of these pensions. You put this in a stark relief. You said the declines in the financial markets may have cost these funds, and I imagine we're talking public pensions, right, as much as $1 trillion, leading their underfunded status is basically at what, about 37%? Is that an accurate characterization of what you said?
That is my back of the envelope.
What else is the Federal Reserve
today?
considering?
It would be about 37% aggregate for the national. But that masks the fact that some of these plans are 20% and some of these plans are 60 or 80%. And it's the 20% plans that are going to cause the problem.
So we're already seeing this in New Jersey with them cutting certain contributions to pensions. Could this end up bankrupting states, or are we going to just see them not pay out obligations?
We want to
I think it's virtually guaranteed to bankrupt the states. I do not believe it is possible to cut pensions without first cutting payments to creditors. The pensions have special protection. 48 states have either constitutional or some other sort of super legal protection for pensions. So it's just going to be impossible for the states, both politically and legally, to cut benefits to pension fund beneficiaries before they default on their state and local debt. But that doesn't mean they pay zero on the debt. That's impossible too, because they need to keep borrowing money. So you're going to see, creditors taking a maybe 10, 15% hit, beneficiaries taking maybe a 20% hit, and the pain will get spread around, but it's still going to be pretty bad, both for municipal bondholders and for pension fund beneficiaries.
President Kaplan, Sarah Eisinger, so Aaron, has there been anything in that $2 trillion federal fiscal plan to address this issue at all?
Indirectly, so giving money to the states, but they're not, the states are spending has gone up much more than they're getting from the federal government. I don't think the federal government will be in a position to underwrite the $3 or $4 trillion it would take for the feds to solve the problem. A lot of optimists think that's how the problem is. The government's going to step in and make up all these deficits. I just think that's unrealistic.
What's this going to do to the municipal bond market?
Well, it already has to some extent, right? So these states that have big pension problems are paying high interest rates, but I think it could come to the point where these states are, not going to be able to raise money in the bond markets at all until they resolve the problem, until they declare a default, restructure debt, restructure pension benefits, and then they can go back and
are bracing for the kind of surge New York has already been living through. Michigan Governor Gretchen Whitmer says President Trump needs to invoke the Defense Production Act.
Our need is right now, and while we see some businesses ramping up, we know that there are going to be people who don't get the kind of care that they need because we just don't have it right now.
In an interview with MSNBC, Senate Minority Leader Chuck Schumer called on the president to appoint a military czar to manage supply production and distribution. The president responded on Twitter saying an admiral is already in charge and Schumer should stop complaining. Vice President Mike Pence will have more on the White House response to the pandemic. He sits down for an interview with Bloomberg's David Weston at noon, Wall Street time. Check back for that conversation on Bloomberg Radio and television. The Pentagon now confirms it is looking to provide as many as 100,000 military-style body bags to prepare for the civilian death toll from the coronavirus. FEMA requested those bags, known formally as human remains pouches, through an interagency group that directed the agency to the Defense Department. Russian President Vladimir Putin is extending an order for most Russians to stay off the job till the end of the month. In an address to the nation, he said there will be exceptions for essential industries, and it'll be up to regional authorities to decide what those are. And Saudi Arabia has tightened its lockdown on the Islamic holy cities of Mecca and Medina, saying people will only be allowed to leave their homes for food and for medical reasons between 6 in the morning and 3 in the afternoon. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you are thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
London. Find Unlimited is here to brighten your day. Vodafone and Samsung are giving you the chance to win one of thousands of tech prizes all over the city, including the new Samsung Galaxy S20 Ultra 5G. Play from wherever you are. When we say the word, look for the Vodafone Unlimited symbol near you for your chance to win. Register now at findunlimited.co.uk.
Hiya, it's Mel B. I'm just calling to say whether you're searching for a babe, a boo, or a bit of fun, there's one B you can always rely on. Badoo, the dating app which matches you with people based on your interests. Now more than ever, we want to be connected. You're more than just a photo, so be your true self and connect with a like-minded community. There's a new B in town. Download the Badoo app today. Badoo, date honestly.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
At Tesco Mobile, we're here to help you stay connected. You can get the incredible iPhone XS with a dual camera for just £24.99 a month, which means you save £450. Join the 5 million customers staying connected with us. Search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 19th of April. Was £37.49, saving £12.50 monthly over 36 months. Must continue usage agreement with Tesco Mobile for 36 months to achieve saving. Subject to status. Terms apply. See tescomobile.com/terms.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The sports world is full of inspirational stories of heroic figures. It also has its fair share of shady characters. For detailed retellings of the darkest sagas in sports, explore TuneIn's documentary podcasts, like 30 for 30's The Sterling Affairs, about the scandalous life and times of the former Clippers owner, Donald Sterling, and Gladiator, which follows Aaron Hernandez's transformation from Super Bowl star to convicted murderer. For these and more, search sports documentaries on the TuneIn app.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your
Dow Jones Industrial Average is up 1.5%, up 322, and the Nasdaq is up 1.1%, up 83. The 10-year is currently down 730.
Only pay for what you need.
Liberty, 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 liberty.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
People tell you not to panic when the market goes wild, but it's human nature. What you should not do is let it impact your investment decisions. Easier said than done, right? Well, here's what you can do to get your emotions in check before you do something rash. Take a few deep breaths. It really does help combat stress. Consult with a financial expert if you can. You'll get a reality check and put time between your impulse and your actions.
Will market
markets correct course in the second quarter? One top strategist shares her view on tradingnation.cnbc.com. More Squawk on the Street coming up.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Welcome back to Squawk on the Street. Time now for the Santelli Exchange, and I will send it over to Rick Santelli.
Thanks, David. I'd like to welcome my guest, Zach Pandel from Goldman Sachs. Zach, thanks for joining me today. We all know that these are hard circumstances to deal with and discuss markets, but nonetheless, thank you for joining me. I'd like to get right into it. There's been calls that we need Corona bonds in the U.S. I say we have 2-year, 5-year, 7-year, 10-year, and 30-year, and a Treasury and a Fed that can print a lot of debt, and there seems to be many willing buyers. We don't need them here, but there's a place I think that needs them really bad, and that is Europe. How is Europe going to pay for all the cradle-to-grave services in addition to try to help some of these economies like Italy control the coronavirus when they have so much debt and so little ways to generate new debt?
Right, but it's a great question. What European countries, European policymakers need to figure out is a way to stimulate growth, provide for a recovery within the institutional constraints of Europe. And Corona bonds are one option and something that we think European policymakers should be looking at. But some of this is happening already. I think that's important to stress through the ECB. The ECB is buying the already issued bonds and essentially mutualizing a lot of this debt through its own balance sheets. It buys the bonds, it issues euro notes on the other side, which are a liability of the whole euro area. So to some extent, this is already happening through the ECB's balance sheet. Corona bonds would take us one step further, provide another means to support the economy through the crisis. But I think it's important to recognize that European policymakers are doing a lot, and so we're somewhat encouraged by those steps so far.
Well, Zach, you know, you said that the ECB can buy paper. I get that. So they can put grease in the gears. But our Treasury and our Fed is doing a whole lot more than putting grease in the gears. They're underpinning whole industries. That's what I'm talking about. Who's going to underpin that? For example, France. You take out all the tax collections in France, and what's going to support the system? The bank's best customer, municipalities.
Right. So I would say it's not just about Europe either. When we look at this crisis, we often look at the United States, and the United States has a luxury of being able to issue huge amounts of debt with very little cost in terms of market yields. Many countries just don't have that ability, and I think to some extent Europe is in that camp, especially peripheral Europe, although the ECB is doing what it can to help. But many other countries, especially in emerging market economies, have the same problem. So we have fiscal capacity constraints throughout the world, and that's going to be a key problem in figuring out a way to get out of the crisis. We really hope that the virus itself can be controlled such that countries can stimulate with the resources that they have available. But you're right, Europe does have these fiscal constraints, as well as many emerging market economies. The U.S. really has a luxury that other economies don't in that regard.
Excellent. Zach, it's a complicated topic, and I thought that needed to be underscored. Christine Lagarde truly has her job cut out for her. Thank you for joining me today. Sarah, back to you.
All right, Rick Santelli, thank you. And as you can see, we are building on momentum here, gaining for stocks. The Dow's up 284 points after being negative earlier this morning. S&P up 1.35%. The NASDAQ up almost 1%. Crude oil is the standout here. It's up about 20% or so. Brent, WTI is up about 23% after the president tweets what Joe Kernan had reported to us earlier, and that is a conversation between Saudi Arabia and Russia and an agreement on a production cut. And that is certainly helping the price of oil. Still, keep in mind, oil's down about 60% still for the year. Energy stocks, though, are on the top of the market. We're going to take a quick commercial break and stay on top of this market action on the other side.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
This is the kind of card that has America talking. With it, people with Medicare are getting all-in-one coverage for their doctor visits, hospital care, prescription drugs, and more. This kind of insurance, called Medicare Part C, may also cover dental care, eyeglasses, hearing aids, fitness programs, vitamins, even healthy meals and rides to the doctor. With this kind of coverage, you do not need a Medicare supplement insurance plan. You will access your benefits through your Medicare Part C plan for one low and oftentimes $0 monthly plan premium. You deserve to get the most from your Medicare benefits. Call now for free information that may help you get more coverage for less money. There is no obligation to enroll. Whether for yourself or someone you love, call the number on the screen now. Call now.
Welcome back. New York Governor Andrew Cuomo is pleading with doctors and nurses from all around the country to come to the epicenter of the coronavirus crisis, and that is New York. Our Contessa Brewer is covering that today. Hi, Contessa.
Hi there, Carl. Behind me is a hospital in Kingston, which is about 90 miles north of New York City. They're adding 235 emergency hospital beds inside. That will more than triple the capacity in this county alone. But I just talked to the county executive, and he says he's very worried he's not going to have the medical personnel to staff all that extra capacity. You mentioned the governor putting out this nationwide plea for doctors and nurses. He says, look, we're going to pay you to come in here. And in fact, in many cases, we're going to pay you a lot. New West Staffing Agency, which is a recruiting agency for nurses, says that it has seen hospital pay as high as $10,000 or more per week, plus free housing, plus guaranteed quarantine pay. Fast Staff Recruiting tells us it always pays its nurses as much as 50% more than typical. But Karen Fountain says she has never seen offers this high. She's a traveling nurse who was based in New York City, was exposed to coronavirus, went into quarantine, and now this week is heading back into the epicenter of the crisis. And she says, you know what's bringing her back? It's not the pay.
I think I'm a little apprehensive of going back just because I know how bad it's gotten since I went into quarantine and now I'm out. I'm not scared. I have to go back. There's no way not to. It's my duty. It's my job. I'm a nurse.
So desperate is New York for these nurses to come in here that it's waiving licensing requirements. It says, in fact, if you have a lapsed license from somewhere else, you can go back through, do a one-day training and get relicensed again. They're putting out that national plea. We're waiting to see if it's filled. Fast Staff told us that its applications are up about 300% alone. Carl?
Unbelievable story. We'll see if people respond to that. Contessa, thank you so much. Our Contessa Brewer is in Kingston, New York this morning. Good morning, everyone. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan and John Ford, coming to you live from different locations this morning. On a fascinating day for markets, futures were relatively weak, but we have added to gains as our Joe Kernan speaks to the president, and then the president tweets about a conversation he had with the Crown Prince of Saudi Arabia, MBS, saying he expects them, after having talked to Putin as well, of a production cut of oil between 10 to 15 million barrels of oil. And John Ford, that has resulted in an almost, I think, got to be unprecedented squeeze in crude, which at one point was up almost 40%.
Certainly has. And Carl, as Jim Cramer has been talking about quite a bit, equities are responding to the oil markets. This morning, it seems to me that a number of networking and broadband players, including our parent Comcast, Verizon, some cloud players are responding particularly positively. Not sure exactly why that is, but on all things stocks, we can go to our senior markets commentator, Mike Santoli, who's with us. Mike, quite a bit of herky-jerky action from the pre-market to now. Any trends that you're picking up on?
I wouldn't say trends, John, that last too long. I mean, I think there's still this kind of choppiness, a little bit of aftershock navigation is what we're trying to deal with right here. I do think it shows you what happens in these really tightly compressed markets like oil was right there, when you have just a hint of something going the other direction, and you're going to get this kind of big exaggerated pop. We're in that zone in a slightly less extreme way with equities too. I mean, right now today we've traded right within yesterday's range. So even though it seems like we've been popping all over the place, we've essentially just sort of operated within the bands that we set yesterday. So I don't think yesterday's 4% decline necessarily did too much damage to the idea that perhaps we're in this bottoming process. Maybe a week ago Monday was okay for a short-term extreme low, but also today's rally doesn't really change the story either, that it could go either way. It's unsatisfying. I do think the conversation perhaps is going to turn a little bit more toward policy stuff again after we saw those jobless claims today, and the question of does the market crave a little more of a cushion from Congress, from Phase 4? We're not hearing a lot on that front, and that might become a little more of a talker.
Yeah, Mike, if I recall, it seems like months ago, but I think it was only a week and a half ago, when the markets took a particularly big plunge. The S&P closed at around 2480, I believe, and has kind of bounced around since then. Given that in the past couple of days, we had the estimate on potential deaths in the U.S., which was a shock to many. We just had this big jobless claims number this morning, and I see the S&P is just above 2,500. Yeah. Does that speak to the kind of potential bottoming that you're talking about?
Yeah, I mean, if we go to the extreme lows, we were slightly below 2,200 on an intraday basis and closed a little bit above there. So that's the zone that we're now kind of tentatively saying is perhaps some kind of a floor. Now, on the upside, market hasn't really demonstrated all that much except for a bounce so far, but it's very much a day-to-day. So I think that it's one of those deals where we look at these past instances, and I'm going to reach into MBA lore or jargon and say people are saying trust the process, and the process is you tank first, you have awful performance. That would presumably be that 35% straight line drop that we got, and then you're not really good, but you're improving and you're trying to monitor progress, and you're probably going to have some ugly games along the way. But in theory, you get some better draft picks at a pretty good bargain as you try to reinvest, and then maybe you win down the road. So that's where we're looking at right now if we can follow that path.
Mike, I want to go back to crude right now. The move we're seeing in Brent, 30% increase today. Maybe it doesn't feel like a lot after all the volatility we've seen over the past month in the crude market, but in general, from a historical perspective, that is just a huge move. And then, of course, the impact it's having on energy equities as well. We've got President Trump poised to meet with oil executives tomorrow. In the meantime, you have the beginnings of bankruptcies. Whiting, for example, saying that it's going to declare bankruptcy yesterday, and that seems to be rippling out into the credit market and causing some angst there as well. So how much, if we were to actually see some sort of deal, how much does that actually calm something like the credit markets?
I think you'd have to see it build from here, Morgan, to really calm the credit markets. If you're looking at implied default rates and energy high yield debt, it's relatively extreme at this point, and really that's not going to be rectified by crude oil trading in the mid-20s necessarily, unless it really did stay there for a while. So I think that the bar is relatively high for reversing the process, but to sort of get to a point where you say the energy stocks were just completely sold out and abandoned for months on end, and oil itself was very much a heavy short, and people saw just no relief from it in terms of supply or demand. At least on the supply side, you could say it interrupts that feedback loop for a little while. I will say it's of all the things that have beset these markets and the economy, this is almost the one area where a phone call between leaders can have any material impact. And so you might have just seen it right there.
Yeah, I mean, this is headline risk on steroids, Mike. Dow Jones is now saying that the Kremlin, according to state newswire RIA, the Kremlin denies Putin spoke with the Saudi crown prince. We have seen oil back off, but until we get these production cuts verified and on the books, it's going to be hard to trust, regardless of what the president or state media in Saudi Arabia say.
Although, interestingly, the tell sometimes will be is if the story is refuted and the market still trades higher, it could just mean, again, that it was at such an extreme point that, at least even the hint that there could be some change in that equation is probably enough for today.
Mike, what are you looking for from here, whether it's today, whether it's throughout the rest of the week, as far as how the market behaves, whether it's volume, whether it's reaction to particular news, to get a better sense of where we are?
I think it's a matter of containing the sell-offs. Yesterday was, down 4.5% day on almost every major index, but it was slightly less intense than a week ago Monday. And then a couple rally days in a row. You want to see breadth expand on those rallies. So in other words, you want to have these days, a couple of these days where 80-90% of all volumes to the upside, and volatility will continue in that context probably to drain away a little bit. So it seems like a little more of a trading range as opposed to just this pinball type action that says that there's just no conviction within the market on the buy and sell side. So the market continually has to go these vast distances to find willing buyers and sellers. That's the environment that essentially is very hard to handicap until it settles down.
Yeah, Mike, and just along those lines, as we get the March jobs report tomorrow, which I think is already really being shrugged off, given what we've seen in more real time in terms of unemployment claims, that record 6.6 million reading that we got this morning on top of a record last week. But as we start to get more of this data, which so far has been backdated and has been, in many cases, while weaker, has still been better than expected. I mean, what holds the most stock right now? What matters, if any of it?
I have to say that the incoming numbers, they need to build up a little bit more in the coming weeks and months in order to get some kind of a picture of this arc, this storyline that we're going to be able to tell in terms of whether we've just front-loaded most of the shutdown impact, and that's what's evident in the claims numbers. And then we really are going to be monitoring the wear and tear on business activity along the way, and credit markets and all those things that are knock-on effects, and state budgets and all this other stuff. So I think that the macro data, there's a high burden of proof for when that becomes relevant in an immediate basis. I think you have to have it accumulate for a while now.
Mike, always great to start the show with you, Mike Santoli. Meantime, FEMA making efforts to coordinate medical supplies from around the world in the wake of coronavirus. Elon Moy has the details for us. Elon.
Well, Morgan, President Trump has been talking a lot about a new White House initiative that's designed to get those critical medical supplies to the U.S. faster. It's called Project Airbridge, and essentially FEMA is chartering planes to get the gear from overseas to the U.S. in a matter of hours or even days. This plane left Shanghai yesterday. It arrived in Columbus, Ohio at 6 a.m. this morning. It's carrying 83 metric tons of cargo that includes masks, hand sanitizer. The gloves are from McKesson. Now, the federal government is not directly purchasing this equipment. It's just shipping it. But FEMA told us that the goal is for 50% of the product to go to high-risk counties that have been designated by the government, and the other 50% to go into the private market. Now, there is a lot of frustration amongst state and local officials over the process for getting these items in the private market. They say that's a free-for-all, while the federal process, they say, is opaque and confusing. In fact, it's not even clear if all of that equipment that you see in Ohio will even stay in Ohio, if they will even be getting any of it, even though the state has said that it is facing some critical shortages. Now, on Twitter today, President Trump dismissed some of those complaints. He wrote, massive amounts of medical supplies, even hospitals and medical centers, are being delivered directly to states and hospitals by the federal government. Some have insatiable appetites and are never satisfied. Politics? Remember, we are a backup. So, guys, this is a sign that the president is trying to sort of shift the blame from the federal government to the states for the shortage of supplies, even though we know that everyone is scrambling to get their hands on what they need. Morgan?
Yeah, Elon, scrambling being the key word there. I'm curious because even though the air freight data, the traffic is down, we're getting reports that the rates right now to transport some of these goods on airplanes, on aircraft are surging. Any sense of who specifically is working with the government to move these supplies? Is it your FedExes and UPSs of the world, or is it others as well?
So we don't know exactly what is being paid in order to move this critical medical gear. We do know that the White House has convened a supply chain task force. They met at the White House on Sunday. It's being led by Jared Kushner that is trying to coordinate some of these efforts. But part of the frustration that we have had, and also that the state and local leaders are having, is that it's really not clear who is getting this product at the end of the day, where it's going, and how much anyone is getting. So we are trying to find out all those details. Hopefully we'll have some more visibility into this process, but that has been one of the central issues with the supply chain all along. States aren't even sure why they're getting what they're getting and why they're not getting the things that they've asked for.
All right, Elon Moy, thank you, especially during a crisis of this magnitude. I don't think many people are looking at the federal government as a backstop. They're an essential coordinator. Still to come, don't miss FCC Chair Ajit Pai on the agency's latest efforts amid this virus outbreak. We're going to take a quick break. Stay with us.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Not all heroes wear capes, but most wear tights.
And here we go, now it's underway. Cover on Rowan, win seconds.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
6 a.m. Eastern. Watch and listen live on the CNBC app.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
We are KiwiCo, and we deliver hands-on STEM projects designed to inspire young innovators. Kids of all ages can explore science, engineering, art, and more. Get your first month free. Visit trykiwico.com.
For every staircase supporting a grand entrance, door frames marking milestones, floors kissed by bare feet, and walls making room for new memories. Protect the pure joy of home with Terminix. We're committed to keeping termites out of your home with our all-new On Guard termite protection system. Always backed by the Terminix promise to keep your home strong enough for all the love it holds.
Well, in a day when we've got record jobless claims and multiple people who are working or trying to work from home, joining us to talk once again about cybersecurity risks for business due to the coronavirus is Herjavec Group CEO and Shark Tank investor Robert Herjavec. Robert, good morning. Great to have you back.
Good morning, John. Good morning, Morgan. Good morning, Carl. Thanks for having me.
Robert, I want to start with small business and the employment picture. Many people know you from Shark Tank as an investor in small businesses, startup businesses. These weekly jobless claims are at 6.6 million, double last week's record number. We just last hour had Dallas Fed President Robert Kaplan on. He was talking about small business and questions about how tough it is for them going through this period, how hard it might be for them to recover. What are you advising your invested companies to do when it comes to employees these days? Do you think they're going to be able to hold on to them? Are they going to have to let many go?
Yeah, it's really tough. I saw that report. We've been advising our small businesses, and I've been talking to a lot of small businesses every day, and it's really painful. And these numbers are of biblical proportions. The key for every small business is you have to survive. And I think it's easy to say, don't let anybody go and do the right thing. But nobody really knows how long this is going to last. And our advice to small businesses, make your own decision because you have to survive. If the business doesn't survive, there's nothing to come back to. And a lot of our businesses that, they kind of break into two camps, people that saw it coming and moved quickly, and now people that are seeing the reality of these numbers. And I think we're going to see even more layoffs in April.
Wow. Does this come down to the importance of cash and having access to it, having it on hand?
Yeah. The first thing we said to all our businesses and our advice to all the small businesses out there is hoard cash. I mean, not physically in your house, but in your bank account. Take anything on your balance sheet that you can put into liquid cash right now and do that. And then look at all your expenses and put them off. And I know that's awful. And I know that every time you don't pay a bill, that's another business that's affected. But you guys know yesterday was rent day. And I got to tell you, my gut feel tells me very few people paid rent today. And now we're going to start seeing the ripple effect of that.
Yeah, certainly a lot of ripple effects. I'm curious, I want to get your take on the CARES Act and what that's going to mean for small businesses, especially since tomorrow is the day where they can begin to connect with their lenders and start to take on these loans, hopefully, I guess potentially on a first come, first served basis to be able to weather this situation. Is it going to be enough? Is it clear enough what companies are going to be able to have to do and the steps they're going to have to take to be able to hook into this government assistance?
Well, Morgan, first of all, I think the government's done an amazing job with the CARES Act. I am so happy and optimistic with the amount of stimulus that's being put in. I do think, by the way, we're going to need another stimulus act in about a month. Here's the challenge. Everybody is going to file immediately. It's kind of like the unemployment numbers. I saw a report you guys were doing. People can't get through on unemployment. Think about how many people are going to file for this right now. I think there's going to be a challenge in getting it out there, but it's coming. And again, you've got to survive in order to get that stimulus. If your business isn't around, there's no point in getting the stimulus. But I think you got to apply right away, and you got to make sure that you can qualify for it. But it's a great program.
Yeah, we'll see what the execution's like. It's going to be tough. We'll see how the servers perform tomorrow, Robert. I want to go back to your point about rent. I'm looking at some forecasts of potential mortgage delinquencies. I'm seeing numbers that you might see 10 to 12% this month. How high do you think that number can get?
Oh, I think it's going to be quite a bit higher than that. I really got to tell you, I don't think, I think people that have a business and the general population are going down different tracks. I think people that have a small business or even a medium-sized business or even a large business in some cases, the reality of this situation is very stark for them. And anything they can do to push off costs or expenses, they're doing right now. So I don't know if the delinquencies are going to be high. It all depends how long it goes. But for the next 2 to 3 months, a lot of people aren't going to pay their rent. A lot of people are going to push off those kind of bills. And it's going to be interesting to see what happens. If the entire population goes back at once, which I don't think is going to happen, but if parts of the population start going back, things are going to slowly return. But the next 2 months are going to be brutal for mortgages, for commercial paper, for leases. And here's the reality. What are the commercial landlords going to do? They're not going to kick anybody out right now because it's not like anybody is looking for office space right now. So they're just going to have to take it.
Yeah, and then of course you've got so many more companies with their workforces operating remotely right now, and you got to think that some of that might actually become a more permanent structural change as well. And what is that going to do for commercial real estate longer term? Which actually brings me to another question on another topic for you, Robert, and that's there's a lot of focus on privacy right now on some of these different apps that are being used so heavily. Zoom, for example, today, which has doubled its user numbers and done so very rapidly. How do businesses and then, of course, now consumers and students and employees navigate those privacy issues and make sure that what they're doing online right now is secure and safe?
Yeah, thanks, Morgan. This is the golden age for hackers and people like that. I mean, you couldn't have picked a more perfect time to hack somebody. So, we run a pretty large cybersecurity business, and we're seeing alert volumes way up, and we're seeing the amount of IR, which is remediation work, people that have been breached, way up. We've seen more work in the last 3 weeks in that area than in the last 16 years. So the hackers are definitely out there. In terms of Zoom, there's a lot of privacy settings in Zoom. If you just go to settings and you can add passwords, you can add encryption. And a lot of people aren't doing that because you're just rushing to Zoom. So we really encourage people to do that. The second part of that is phishing. 85% of all malware still comes through phishing attacks. And phishing preys on our ego, on our vanity, and on our weaknesses. People are looking for information right now. So we're seeing a lot of COVID-19 update or how to apply for an SBA loan update and all those kind of things. And we're encouraging people to be very, very careful with those. If you don't know the link, one of the easy ways to do is hover over the link when somebody sends you an email. And when you hover over it, and if it doesn't appear the way it is in the email, it could be a phishing attack. So just be very careful. And the final point that we're seeing, Morgan, is a lot of people that work for big companies are working from home with secure connections, meaning they have a secure laptop or a secure connection. But here's the challenge. They go out to the bathroom or they go get breakfast, they leave their laptop open and their teenager comes along and starts opening another session. So you've got to make sure that every time you're on a secure connection, you're not using it, make sure you log out and log back in.
Robert, a lot of great information. We started off talking broadly about small business, got into some cybersecurity. I want to get a little micro with you. Talk to us about how you're managing your business right now, maybe some changes over the past week as we've gotten more clarity on the depth of this situation and some measures that you're prepared to take to make sure that as much as possible, your assets remain healthy.
Yeah, I have to tell you, one of the things that's been really hard for us, I mean, we have 350 employees, and about 3 weeks ago, went through a pretty dark time because, you always think I've spent a lifetime building my business and my reputation and my brand, and the thought of it possibly all going is really scary. I don't care if you're a shark. I don't care how much money you're worth. I don't care if you're a small business. People take a lot of pride in their small businesses. nobody starts a small business just for a paycheck. They have their entire ego and who they are and everything tied into that. And so it's been really hard. And then, you have to let some people go. In our case, we had to do some initial layoffs in non-essential services so that we could actually increase our services people. It was about 8% of our staff. And I got to tell you, it's brutal. It's absolutely painfully brutal. You feel guilty, you feel bad, but I always like to think of it that we still have over 300 people that I feel incredible responsibility to, and we're seeing a bit of an uptick in our business now. So I'm optimistic, but I think the emotion for every small business owner is really difficult. And what we're telling people is the one thing you have to control is yourself. You cannot panic. You cannot let somebody else make you feel guilty for the decisions you have to make for your own business. And nobody started a business to take the easy road. And this is a hard road, and we're going to get through it. But you got to make sure that you survive to see the light at the end of this tunnel.
Well, Robert, so many small business owners can relate to exactly what you're saying, and we see the pain for workers reflected in this big number this morning. Thanks for sharing that, and thanks for being with us, Robert Herjavec.
Yeah, thank you.
For the time being, we are holding on to gains. S&P's up about 36 points, not quite highs of the session. Take a look at FANG, though, as we go to break. Squawk Alley will be back in just a couple of minutes.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Folio, pick up the phone and call to receive the complete guide to buying gold, which will provide you important, never-seen-before facts and information you should know about making gold, silver, and platinum purchases.
Pick up the phone and call America's Gold Authority, U.S. Money Reserve. With nearly 2 decades in business, over $1 billion in transactions, and more than 500,000 clients worldwide, U.S. Money Reserve is one of the most dependable gold distributors in America.
You have to accept, you and me, that the world has changed, and we need to change with it.
And that's exactly what we've done.
From New York to Los Angeles,
London to Singapore, we've changed course and continue to adapt.
Getting you the story
and delivering the facts.
Speaking directly to the newsmakers on the front line of this fight.
The world has changed,
but our commitment remains the same.
To keep you informed.
Stay safe.
We're all in this together.
Together. Together.
Coming up on 11:30 on the East Coast, let's get the European close now with Seema Modi. Hey, Seema.
Hey, Carl. Stocks in Europe losing a bit of steam into the close following 2 days of losses here. Now, at the top of the stock 600 is British energy giant John Wood Group. In fact, a notable rebound for European energy producers following news that Russia and Saudi Arabia could cut production. And manufacturers and industrial operators of heavy equipment, Siemens, Valeo, CNH, Industrial, among others, are trading higher at this hour. Though
though Goldman Sachs still says there could be more pain ahead for European stocks. Economists there estimating a 45% decline in profits for European companies in 2020 versus the 30% decline they're estimating here in the U.S. Even on valuation, Goldman points out that Europe is trading right around 12 times forward-looking earnings, but that's not as low as Europe traded during the sovereign debt crisis when stocks traded at around 7 to 8 times earnings. So something to take into account as we look at stocks close higher there. Morgan? For now, back to you.
Yeah, a little bit of context. Seema Modi, thank you. Let's get the latest on the coronavirus outbreak. Frank Holland has those headlines for us back at HQ. Frank.
Hey there, Morgan. Here's the very latest. House Speaker Nancy Pelosi has announced the formation of a bipartisan House Select Committee to provide oversight of the coronavirus stimulus plan. The committee is charged with reviewing how the $2 trillion is spent. NBC News is now reporting a deal has been reached to let sick passengers off 2 cruise ships that have been off the Florida coast waiting to dock. 4 people have died on the Zandam, 9 others tested positive, and 179 are showing flu-like symptoms. Florida Governor DeSantis previously said the sick passengers should not be dumped in his state. And the nation's top infectious disease expert is warning the U.S. could see a coronavirus death toll similar to Italy's.
Italy got hit very hard. And it's very clear that we are getting hit very hard. Right now, the epicenter of it in the United States is New York City. But as you see, it's not going to be confined to New York City. We're going to be seeing this kind of thing in other large cities.
And as always, for more coronavirus coverage, head to CNBC.com. Back over to you.
Yeah, thank you, Frank. That is a heavy warning. And after the break, we're going to hear from FCC Chairman Ajit Pai. Stay with us.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your...
At Leaf Filter, we're on a never-ending journey to end gutter cleaning forever. Whoa! Way too dangerous, Bill. Way too clogged, Melissa. Leaf Filter, the nation's #1 rated gutter protection system, will keep you safe and protect your home. We guarantee you'll never have to clean those nasty gutters again. Everybody okay with that?
Oh, I sure am. Call or go online for your free gutter inspection and estimate.
Act now and save 15% off your purchase.
It's just a quarter, right? But what if Acorns automatically invested that quarter every time you bought coffee for a month? What about a year? 10 years? And what about the change from food, movies, parking, gas? What about the change from everything you buy? And what if Acorns invested it all into a diversified portfolio, giving your investments a chance to grow? What if you didn't have to change your life to change your life? Then it's not just a quarter, is it?
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
The FCC is announcing it is enabling rural broadband providers to waive fees and scheduling an April 23rd vote on boosting Wi-Fi speeds during the coronavirus crisis. We're joined this morning by the chair of the FCC, Ajit Pai. Mr. Chair, it's good to have you back. Welcome.
Hey, good to be with you.
I don't know whether you ever imagined we would see the kind of demand for bandwidth in this country that we're seeing under your tenure. But what kinds of moves are necessary and possible? And how would you gauge right now the ability of the bandwidth to handle the kinds of things we're doing right now?
Well, great questions. A few weeks ago, when we realized that millions of Americans were going to be transitioning back home, working from home, educating their kids at home and the like, we recognized that it was critical for America's broadband providers to step up to the plate. And so I asked them to sign my Keep Americans Connected pledge. That pledge includes 3 parts: not cutting off service for any consumers who are unable to pay their bills due to disruptions caused by the coronavirus pandemic, as well as for small businesses as well. Secondly, waiving any late fees that may be incurred. And third, opening up their hotspots, their Wi-Fi hotspots. Thus far, over 650 broadband providers covering the vast majority of American consumers have taken that pledge. So I'm proud to say that those consumers remain connected to be able to do the things they need to do with broadband. Some of those providers have gone even further, lifting data caps, increasing speeds without charge, offering low-income consumers specialized services and the like. Even going beyond that, however, we've worked to make sure we pull out the stops to ensure that broadband connectivity is going to be there. As you might know, the president signed the CARES Act last Friday. I put out a plan executing the $200 million telehealth authority that Congress gave us on Monday. And on Tuesday, the FCC approved my plan. So we've got a major new telehealth initiative to help those heroic healthcare providers and the patients out in the countryside who might not be able to go to a bricks and mortar facility, get the care they need. But bottom line is we're doing everything we can to make sure that broadband is there in every facet of Americans' daily lives, disrupted as they are.
Where would you say the strain is, if there is strain right now? Is it urban? Is it rural? And how can you explain to viewers how easy it is to add capacity in areas where you are seeing the system get stretched?
Those are a lot of key points. In fact, just yesterday, I held a conference call with all of the nation's major broadband providers, as well as the trade associations representing over 1,000 of those broadband providers. They told me the network capacity the network usage has increased about 20 to 35%, depending on the part of the country and the time of day. Interestingly, a lot of the usage, as you might expect, has migrated from urban areas to suburban and rural areas where people tend to reside. And one of the things that's interesting is network capacity has also scaled to meet that demand. Overall, the message I got from the broadband providers is that they architect their network in order to handle the peak expected traffic. So thus far, even though the usage has gone up, the network has plenty of capacity to deal with that. And so we're monitoring that carefully, both on the wired and wireless side, to make sure that that continues to be the case. But thus far, I'm proud to say that the American broadband economy has been very, very strong, which has been a linchpin, as you know, for many American families.
Yeah, that is good news. Chairman, it's John Fort. Good to see you again.
Good to see you too.
Last week we had on Commissioner Jessica Rosenworcel, and she had an interesting suggestion that sounds great to me, and that is a national report on broadband performance, particularly during crises like these, so the public can see in detail how broadband is performing and perhaps understand broadband better as an essential service for the economy during times like this. Are you behind that idea?
Well, we certainly want to know what the state of the network is, and that's why I've been constantly in contact, including just yesterday, as I mentioned, with these broadband providers. They are the ones, of course, who own and operate these networks. They are the ones who have the most insight. And in fact, you can go right now to the websites of many of the trade associations, cable trade association, telephone companies, et cetera, that have websites where you can monitor the network performance. For example, the cable one includes a state-by-state analysis of how the networks are holding up. So by and large, I'm proud to say that the broadband economy, again, has been very, very strong. We're going to continue to monitor that going forward. And in the meantime, we're going to do more, as much as we can within our authority, to increase the capacity of those, including by making a lot more Wi-Fi spectrum available, which is critical for American consumers right now.
Chairman Pai, I'm glad you just brought that up because given the fact that you are moving to make some changes in terms of that allocation of public airwaves to increase Wi-Fi speeds right now, a proposal that you're expected to vote on later this month. There's proponents of it, there's critics of it, and I think it just raises the question with all of the spectrum that is currently in play and that the FCC is currently analyzing right now is how you determine who gets what.
That's a great question, and it's always a challenge because there is very little greenfield spectrum these days. Everybody has a use of some part of the spectrum or the other, but in particular, this 6 gigahertz band, which I've proposed now to make available for Wi-Fi, has been described as one of the biggest breakthroughs in Wi-Fi, if not wireless, period, in a generation. And the reason is that consumers are increasingly relying on it. Right now, I'm relying on Wi-Fi in order to do this interview, and I'm sure many of you are out there as well. Many of our viewers might be as well. So by making the spectrum available for Wi-Fi while protecting the incumbent users, electric utilities, broadcasters, and the like, we're able to have the best of both worlds. Consumers can continue to enjoy Wi-Fi, and we can also protect some of those important incumbent uses. Here, as I've always said, our decisions at the FCC are driven not by politics or press releases, but by the physics. And so I sat down with our engineers and very carefully went over the technical details of this to make sure that we are doing the right thing. This is in the public interest, and we're very confident we'll have a unanimous vote in a few weeks.
Chair Pai, Zoom has 200 million DAUs now. They had 10 million in December. SpaceX has banned it on security privacy concerns. How much do you share those?
We're always concerned about consumer privacy. We work very closely with the Federal Trade Commission, of course, which has primary jurisdiction over privacy issues when it comes to the internet economy. And I've, of course, been following some of the privacy issues that have been raised as consumers migrate to some of these online platforms. And that's one of the things we want to make sure is that although the connectivity is great in terms of giving people a connection to the outside world, we also want to make sure that some of their personal information is protected. And so the FCC has taken steps from everything from online platform usage to robocalls to make sure that consumers are aware that their personal information is important, it's going to be protected, and that we all have a stake in making sure that our privacy is maintained.
Chairman, you mentioned robocalls, and that leads me to ask, complaints about fraud, are those up? Are there new types that you're seeing out there that the public should be aware of?
Unfortunately, the fraudsters follow the headlines just like anybody else, and we have seen a number of fraud-related robocalls, scam calls, and scam texts. In fact, if you go to the FCC's website, fcc.gov/consumers, you'll be able to find some sample audio and sample text in which robocallers have asked consumers for personal information, have suggested to them that there's a fake testing kit that can be sent to your home or a fake cure that's available if you just hand over some information. We want consumers to protect themselves by not answering the call if it's from a spoofed phone number, not handing over personal information and the like. In addition, I can't discuss publicly what we're doing on the enforcement side, but I can say that the FCC is very determined to be an aggressive cop on the beat at all times, and especially during a pandemic when those who wish consumers ill would prey upon them when they're at their most vulnerable.
Chairman, Carl just mentioned SpaceX, which is in the process of building out a satellite constellation for broadband service. One of its biggest rivals, OneWeb, a startup that was backed by the likes of SoftBank, just filed for bankruptcy a couple of days ago. Amid everything that's going on with coronavirus and the economic fallout right now, obviously a key priority for the FCC has been to close the digital divide and to increase connectivity, particularly in some of those hard-to-reach places like rural America. How concerned are you right now, given the circumstances, that some of these satellite efforts to boost connectivity are at risk?
That's a good question. One of the things that we've made it a hallmark of our administration the past few years is making sure we promote innovation in the broadband ecosystem. And that includes space, SpaceX, OneWeb, some of those other companies. Obviously, this is a difficult time for a lot of these providers, especially the nascent ones. But we're confident that companies like SpaceX, which is still launching satellites, and others will be able to provide an alternative in some parts of the country where the business case for terrestrial deployment is just too tough. We're consistently going to be monitoring that situation to make sure we do what we can in terms of relaxing regulations and the like, to encourage all these companies to continue to innovate. But it is a concern. And on the terrestrial side, I think it only underscores the importance of the FCC's efforts that I've talked about for a long time in making sure that we push ahead with some of our rural broadband initiatives. There are a lot of voices in Washington, for example, that want us to postpone the first phase of our Rural Digital Opportunity Fund. The first phase of that is a $16 billion fund to get broadband, high-speed, high-quality broadband to unserved parts of the country. I don't want to do that, especially when we've seen now that there are many parts of the country that really need that broadband connection in order to live their daily lives. So we're going to continue pushing ahead with vigor to make sure that people have the connections they need to participate in the economy despite some of the disruptions.
Mr. Chairman, there's a lot on your plate, and we're lucky that we went into this in some ways with this a priority, obviously, for the administration. Our thanks to you. We'll talk to you soon. Ajit Pai.
Thanks to you, and I hope you all stay safe.
Thank you. And we are just getting the latest numbers on COVID-19 from New York Governor Andrew Cuomo, those local numbers. Here he is moments ago.
Number of cases continues to increase. We're up to 7,917. The number of people tested, again, is the highest rate in the country. And per capita higher than China, per capita higher than South Korea. We tested 18,000 people. Total tested 238,000, which is a lot of people. But remember, New York, you're talking on a base of 19 million. So Number of positive cases up to 8669. 92,000 total in the state, predominantly in New York City, but you see Westchester and Nassau, which by percentage is a troubling number. Remember, New York City is so much larger than Westchester, Nassau, or Suffolk. So those numbers are concerning, and we're watching those. You look to see in Nassau County, 1,000 new cases. 1,000.
All right, those are the latest confirmed case numbers out of hotspot New York from Governor Cuomo. Still to come, the U.S. Army on a mission to combat the coronavirus. We'll speak with the Secretary of the Army, Ryan McCarthy, after this break. Stay with us.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
It's TuneIn Sports on this day, April 2nd, 2019. OKC guard Russell Westbrook becomes the second player in NBA history to have 20 points, 20 rebounds, and 20 assists in a game.
There it is, 20 rebounds. There it is, 20 game. First time since 1968. And Wilt Chamberlain.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Not all heroes wear capes, but most wear tights.
And here we go, now it's underway. Cover on Rowan, wins.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
Your policy qualifies. Or call 1-800-514-7800. Coventry Direct, redefining insurance.
Welcome back. With the S&P up 1.5%, let's get to Wilfred Frost for some news and updates regarding bank lending. Hey, Wilf.
Hey, Morgan. Yes, I just spoke to a senior executive at a major bank who's responsible for the Paycheck Protection Program at their bank. And the bottom line is this. It is, quote, beyond optimistic, end quote, that this will be ready by midnight tonight or any time on Friday. This senior executive says, while I can't speak directly for the other banks, been on lots of calls with them and gets the broad feeling that the other major banks are in a similar place. They've been giving lots of feedback to the SBA and Treasury and have been for the last couple of days, not suggesting they're falling on deaf ears, just simply that a target was set before consulting the banks and it was an unrealistic target. Lots of minor issues being mentioned, like interest rates, KYC requirements, what happens if there's fraud. But I'm being told it's more simple than that. They need the guidelines from the SBA on precisely what is needed from customers in order to extend a loan, and they haven't got that yet. Kate Rogers, in fact, just tweeted out that an official at the SBA familiar with the project said that guidance had not been finalized yet, and that's the problem. That's what we're waiting for. And this executive at a major bank suggests that we're too close to deadline now, that even if we get that guidance today, it's highly optimistic that they'd be ready by midnight tonight. Guys?
All right. Wilfred Frost, thank you. And now let's get to Eamon Javers for some details on White House efforts regarding the oil industry and supply. Eamon?
Yeah, John, we're expecting that big oil CEO meeting at the White House tomorrow. I've been talking with an oil industry source over the past little while who gives me an expectation of what the industry, or at least some of the players in the industry, are going to be asking for from the president. And the main thing is this issue of oil tariffs, which some players in the industry believe the president is inclined to do here, even with this announcement in the past hour or so on a potential deal with the Saudis and the Russians. They're concerned about that. So a number of the players in the meeting tomorrow are expected to argue to the president that tariffs are in fact a bad idea. They're going to also argue for royalty and leasing relief for drilling on federal lands and for storing excess reserves in the Strategic Petroleum Reserve. That's something that the DOE, Department of Energy, is examining now. Also, Jones Act waivers. That's the law that mandates that if you're shipping between U.S. ports, you have to use American ships. That drives up costs. We can expect that they might make a push for that one as well. And last night, two of the big oil trade groups, the American Fuel and Petrochemical Manufacturers and the American Petroleum Industry, sent a joint letter to the president making the case against tariffs here, saying American families have benefited mightily from American energy dominance in the form of plentiful oil supply and affordability. Taking steps to restrict that supply could jeopardize these gains. So some folks in the oil industry not liking the idea of tariffs, but I'm told that one of the big proponents of the idea of tariffs is Harold Hamm, the billionaire oil entrepreneur, who, of course, is a close friend of the president, has the president's ear. One oil industry source telling me that Harold Hamm does like the idea of higher prices because the smaller players simply can't make money at the prices where we're at right now, guys. Back over to you.
Yeah, and he's certainly been on our network to talk about just that. Eamon Javers, thank you for bringing us the latest. The Army, meantime, along with healthcare professionals across the country battling the coronavirus. Thousands of Army personnel deployed in various capacities to support cities and states' efforts to control the spread. Joining us now from the Pentagon is Army Secretary Ryan McCarthy. Mr. McCarthy, thanks for being with us today.
Thanks for having me, Morgan.
The Army is really, just to use your own words, is the tip of the spear in terms of this battle against coronavirus. You're really on the front lines in terms of response efforts right now. Outline what that means, especially when it comes to hospitals, vaccines, and how quickly you can move.
We have three lines of operation, Morgan: prevention, detection, and treatment. And on the prevention front, to the point you illustrated, was we're working on diagnostic test capabilities as well as the vaccines. We're on 5 different tracks, 24 different candidates that we're working with the private sector and other government agencies at various levels of maturity. We have 2 field hospitals deployed up there in New York City from the 101st Airborne Division, and 2 field hospitals that are deployed from Fort Carson that are up in Seattle, Washington. So whether it's vaccines, testing, or the first responders, we have thousands of U.S. personnel involved with us, and they're working 24 hours a day until we find this vaccine and win.
Well, I think what's so striking about this is that for the military, it's not just about protecting the country from this threat, but the force itself, and that's not something that can be easily done with the most advanced weapon systems and networks the way you would see in a traditional conflict or war. So how is this changing the Army's mission, and how are you keeping those personnel safe?
Well, Homeland Defense strikes to the heart of the Army's mission. Our National Guardsmen, we have, I think, over 10,000 deployed at present across multiple states, thousands more that are preparing at various stages to respond to this crisis. Our National Guardsmen come from our communities, and they have been involved with first responding to distributing and logistics. So this is a core mission for the U.S. Army, and we've been prepared, and we are responding accordingly.
Mr. Secretary, that is great to hear, and maybe you can give a sense of the degree to which you do prepare, you do train for a scenario like this. We're used to seeing images and thinking about preparing for actual combat on a battlefield, but this is something different, isn't it?
Very much so. One thing in particular is there are many similarities like that of a hurricane, where we respond in the various communities with providing medical support, logistical support, and take a lot of that burden off of the state and localities. So these are missions, very similar missions that we perform here in the United States, but as well as all over the world.
Mr. Secretary, we're seeing pain in the aerospace sector right now. Boeing this morning, the latest to announce voluntary layoffs, whether it is that company specifically or one of its many commercial suppliers that have announced contingency plans in recent days. We're talking about the same contractors that are crucial not only to commercial aviation, but also to the defense industrial base. How concerned are you about some of the issues that we're seeing play out right now? And how is the Army working to mitigate the financial strain?
Obviously, very concerned. We're in constant communication with our largest vendors. You had mentioned Boeing, who makes several great products for us that have served us well for decades in various combat operations. We're in constant communication. I think that there's opportunity with another potential funding bill that Congress is in the midst of discussions. We've looked at ways could we put some things on order faster to, if necessary, help with the cash flows of these companies. And then as well as other authorities to use under a public health emergency. But these are mission essential personnel, so that if you put the protocols in place, they can still bend metal and make products during the midst of this crisis.
Mr. Secretary, just a quick question on the Navy, actually, and this the sailors in Guam who are being quarantined off of the USS Theodore Roosevelt. How much are protocols being shared between branches, given that it's affecting so many of them?
Secretary Esper convenes updates with all of the senior leaders of the services, the Office of Secretary of Defense, as well as combatant commanders. We had a 2-hour meeting this morning. We did talk about the Teddy Roosevelt and others, and we are looking at precisely to your point about protocols to put in place with additional testing capabilities, so we create these safety bubbles and be able to move personnel in larger groups to get them from point A to B safely, and as well as looking at conceptually how will we train under these strained conditions in the months ahead of us.
Yeah, and along those lines, Secretary McCarthy, I mean, we do have foes that are looking to take advantage of the country's focus on coronavirus efforts right now. Yesterday alone, President Trump warning Iran against a potential sneak attack on American troops, also deploying more military forces to the Caribbean to combat drug cartels and some of the, I guess, increased activity that's happening there. How is the Army and the Pentagon more broadly balancing response efforts, keeping personnel safe, and then, of course, maintaining operational readiness in the midst of some of these threats?
Over half of our brigade combat teams are at the highest levels of readiness. So we are ready to fight tonight to anybody that challenges the United States of America. We have over 191,000 people deployed worldwide in over 140 countries. We've moved testing capability forward to Afghanistan and Iraq in particular, where units are in combat operations. So we have made adjustments to support units that are in contact, as well as putting certain units in our immediate response force to a higher alert posture, to put a bubble around them to ensure they can be ready to go, just like you saw the 82nd Airborne on New Year's Eve deploying that boots on the ground within 18 hours. So times are challenging for us, but we are ready to take on any fight anywhere on this earth.
Secretary, to the extent that you can you give us an update on the Army supply of tests, of protective equipment, of ventilators, which are surely to be essential equipment for this fight, even as it comes to the troops themselves?
So the Army baseline, the total protective equipment that would be required to support our force, as well as be in a position to surge if necessary for operations anywhere in the world, the operational plans that we have in place for contingency operations. What the delta associated with that, we've looked at a defense-wide pool to be able to support the domestic fight we have on hand. Secretary Esper released over 5 million sets of PPE about a week or so ago to domestic distribution. We're looking at potentially more. So we're going to continue to look and see ways we can support this domestic effort.
And finally, Mr. Secretary, I just want to get your take on the contracting process that's happening right now and what that means not only for the defense primes, but for the small and medium businesses that comprise so much of the supplier base in general. You've continued to dole out some of those awards. Future vertical lift, for example, we've seen some down selects in recent weeks. Is that going to continue to be the case, that you're going to continue to hand out these contracts and help these companies through this difficult process?
Absolutely, Morgan. It's something that over the long term is going to be critical for us to find a way to support those second and third tier suppliers that you referenced. But it's the distribution of the funds that we had appropriated to us. Work with the states to find ways to get workers safely from their homes to work, and continue to develop these capabilities and push them down those assembly lines, because we need to continue to put new capabilities in our formation. The world is very complex and dangerous right now.
Well, thank you for all of the efforts you and the U.S. Army are engaging in. Thank you for joining us on CNBC as well. U.S. Army Secretary Ryan McCarthy.
Thank you.
Well, just taking
a
look
at we're watching the markets obviously close to session highs. Dow's up 362. Couple things on the tape, guys. Governor Cuomo, of course, talking about 400 new deaths in New York over the past 24 hours. Also saying that he does expect the apex. There's a range, obviously, of how long it could take the state to reach the apex, but anywhere from 7 to 30 days. He thinks it might be closer to the shorter end of that curve. And then 3M's on the tape, guys, saying that demand for N95 respirators exceeds capacity for now. So we're going to keep an eye on all of that. Let's get to Chanos with the judge and the half.
All right, Carl, thank you very much. It's good to have all of you back with us today. I'm Scott Wapner. Welcome to the Halftime Report, where we do have a special guest, as Carl said, joining us today for an exclusive interview. The famed short seller Jim Chanos is here to discuss the markets and what stocks he continues to bet against and why. Our investment committee is here, too. Josh Brown, Jim Leventhal, Jenny Harrington is the CEO and portfolio manager at Gilman Hill Asset Management. Rob Sechin is with UBS Private Wealth Management, also one of Forbes' top 100 financial advisors. We do want to check where stocks are at this very moment in what has been a volatile few hours of trading. The Dow right now holding on to a 1.5% gain. That's better than 300 points. That's stunning claims number today. Everybody digesting that, of course. And then the stunning move higher in oil as well, on the president saying there could be a cut of 10 million barrels. Our Joe Kernan reporting that first. Let's welcome in Jim Chanos, though. He joins us today on the phone. Jim, welcome back. I hope you and yours are safe and healthy.
We are, Scott, and I hope the same for everybody there and everybody's family.
Yeah, we appreciate that. Can you first just sort of help us? I want to make sure our viewers understand exactly the angle that we're coming from today. What is your current positioning in the market? Are you net short as we speak?
Well, Scott, if you remember, we run basically two different types of pools of capital. We have the short only, which basically we've been doing since 1985 for clients that use us as a hedge, and then we have our own hedge fund, which basically is basically always net long, but to varying degrees. Right now, that is about 50%, give or take a little bit, net long, and that's on the low end of where it's been. We de-risked on the long side there back in late February, early March, and that's probably where we're going to be for a while. And then on the short onlys, it's been hard to stay short. Obviously, in my world, in that world, if the market goes your way, you get less invested. And of course, conversely, if it goes against you, you get more invested. So you're constantly dynamically having to change that. And depending on the client, we have managed accounts where the client's asking us to stay 100%. And then in the funds we have discretion in, we're probably around 75%. And that's basically, kind of in line historically. So that's where we are. And it's been a crazy ride, obviously, as your viewers know.
Yeah, for certain. It's interesting that you say it's hard to stay short. I'm wondering your general view today of where this market goes from here, whether you think that we could retest the lows, if not go lower, or if you think we have put in a bottom in some respects, or we're close to doing that.
Simple answer, I have no idea. Basically what we're telling clients is for them, we're looking backwards and forwards, I think is the simplest way to describe it. We're looking for ideas that were silly based on 2019, and since everybody's going to write off 2020, arguably justifiably so, how do these things look? How do companies look coming out of this? And are questionable companies with questionable business models still priced at a premium today based on 2021? And, surprisingly, there's still lots and lots of situations like that, where companies are just structurally unprofitable. They're not going to they didn't make money in 2019. They're certainly going to lose a lot of money in 2020, and they're not going to make money in 2021. And I think those are the stocks your viewers should avoid, and those are the kinds of things that we're short.
Have you covered shorts? As you say, it is hard to stay short because of the big downdraft that we've seen in the market?
Well, you and I had a discussion. Sometimes it's better to be lucky than good, and we covered our energy shorts at the beginning of this week. And just because they were down an awful lot, if you remember from Delivering Alpha, I gave a talk back in 2017 about the frackers. And just pointed out that we've been telling clients for a long, long time that model was uneconomic. It was uneconomic at $25 oil, it was uneconomic at $50 oil, and it was uneconomic at $70 oil. And that's, those birds have come home to roost. Having said all that, I mean, a lot of our energy shorts were just decimated. And, the risk reward has changed like anything else in the market. And so, in individual situations, obviously we are being selective, and if the stock really takes a dive for some reason, either anticipated or unanticipated, we'll get out. And it's one of the few things that short sellers do in bear markets that people forget about. We're often buyers on weakness. And Luckin Coffee was a good example today, which we were short thanks to Muddy Waters, who urged me to take a look at it back in February. Company comes out, stock is killed. The risk-reward dynamic obviously has changed. It's time to move on.
So you covered your short fully on Luckin Coffee, as the stock, as we're looking at it right now, is down more than 70%, Jim.
Yeah, we did. We did it pre-open this morning, and Luckin's a great example of when people talk about banning short selling or restricting short selling. This stock was being talked about by the fundamental short sellers and the community in January and February as a fraud. And it's one of the things that short sellers do. They are the real-time financial detectives in situations like this. And when you restrict that ability, you take away important actors in the marketplace.
I'm wondering then how you would respond to, and we're in a crisis, obviously,
Yep.
right?
Yep.
We all recognize that.
Yep.
To those who suggest that shorting stocks, and let me make a differentiation here. I'm not really referring to shorts that you had on for a very long period of time, well before the winds of the virus started to blow and started to change and come in a very big way. But what do you say to those who would suggest that now that we have what you could consider to be a quote-unquote forced recession, if you will, and that shorting stocks or maybe initiating new shorts now is not the right thing to do? How would you respond to that sort of criticism? And I'm not suggesting that you are at the current time looking for more targets or not. You can tell me that, of course, but just the general perception of short sellers in the environment in which we currently live.
Well, Scott, I guess I would flip that around and say, when times are booming and people are promoting stocks left, right, and center, and investors are speculating on margin and often urged to do so, whatever the venue might be, whether it be TV or print or whatever, I would argue that far more financial damage is done to investors by that behavior than any behavior might be by fundamental short sellers, who by and large, in an environment like today, are net purchasers of stocks. And so we were selling stocks to those people who were probably doing things they shouldn't be doing with their capital in late 2019, early 2020. And now we're buying back stocks. We're a cushion to the market. So you have to be a little careful on that, in that I suspect that far more damage is done to your viewers and investors at large by behavior that probably should be checked in time of excess than anything, as I said, short sellers are doing in 2020.
And I certainly don't want to speak for you. Are you looking currently for more opportunities on the short side, or is because the market has come down so much, you're a little gun shy to do that at this point?
Well, I mean, obviously, valuations are lower, so we're always looking for opportunities. That's what we do. I don't know where the market's going. That's long been our view as a company, and as my view as a chief investment officer. I don't know where the market is going. I don't know that other people know where the stock market's going. What we do try to do is analyze companies, and we've been fairly successful in doing that. And so the idea is every idea stands on its own merits. Valuation is an important part of that. So if valuations are down, then we'll be less likely to do something. Having said that, as I said at the outset of our conversation, there's lots of situations where the valuations are still excessive, and kind of shockingly so. So I mean, it's interesting. Now, there's lots of things that look interestingly cheap. One area I would warn people about, for example, is the virus stocks. I mean, there's tons of companies and I hear about them every day. On your network and other places about you should be buying XYZ because it's doing well right now in this enforced lockdown. So a lot of these companies that really are not structurally growth stocks are trading at 30, 40, 50 times earnings because they're going to do well in the first and second quarters of 2020. But of course, when the virus subsides, as we all know it will, those companies will probably, begin to not look as attractive going forward. So that would be an area I think that I would tell your viewers to be very, very careful, is just piling into things that are doing well because people are inside and will stay inside for the next 3 or 4 or 5 weeks or 3 or 4 or 5 months.
I mean, are you suggesting, when you say virus stocks, just to make sure we're all on the same page here, the Zoom medias, the teledocs, things that have seen a big run up?
The Pelotons, the Zooms, the Cloroxes. I mean, I could give you a list of 30 names, and I have a list of 30 names. I'm saying that a lot of companies are contracyclical right now because of the virus. And again, what we really would urge investors to do is look at the business and look at 2019 and take an educated guess and do your research and do your work on what you think this looks like in 2021. And if it's still a cheap stock then it might be an attractive investment on the long side. But if it's really, really expensive based on 2019 and 2021, you might want to think twice.
Are you short Zoom Media, for example?
We are not.
What about Teledoc?
Nope. I wouldn't do that to Josh.
We'll get to Josh in just a minute. I'm just wondering, just picking up on our conversation too, it's interesting that you talk about, analyzing stocks. That's obviously what you do for a living. This environment is incredibly difficult to analyze anything.
Yeah, you have to write off 2020. I mean, again, I think and I think the market is and will ultimately. But you also have to be very careful because 2020 is going to expose a lot of business models. For example, look at the restaurant industry, which we have been short and remain short. I've talked about some of these stocks on your show and elsewhere on CNBC. I mean, what people got really wrong here was they looked at the restaurant companies, which are basically franchisors, and they said these companies are asset light, and therefore they just collect coupons in the form of royalty fees. But what they missed was their franchisees were really, really leveraged, the people operating the boxes, and struggling before the virus hit. There were a number of Chapter 11s in the restaurant industry in December, January, and February. And on top of that, the franchisors, the guys like Dunkin' and Wendy's and restaurant brands, all are landlords as well. So they lease restaurants from investors and then sublease them to their restaurant franchisees. So there's sort of double hidden leverage there. And then on top of that, most of those companies then went out and bought lots of stock back at the highs. And so you've got companies that are really, really levered that are basically now the landlords for really, really levered restaurants underneath them who are also leveraged and losing money and or closing. So it's like triple leverage. And those business models, I think, are going to be exposed in 2020 for what they really are. And I think it's going to be one of the dark sides of the buyback boom, I think.
So names like Wendy's, Dunkin', and QSR restaurant brands, which you had said prior that you were short, you still are, all three?
We still are, yeah. We still are short all three names.
And more stocks in the restaurant space as well, or are those primarily the ones that you have talked about and that you still are?
Those primarily, but we're keeping an eye very closely on the whole space. Leave it at that.
And even in the prospects of what we're currently dealing with, that some of these businesses that have drive-throughs could obviously see a tick up in business, or at least try to, toe the line until the other side.
Yeah, again, we're looking at situations. We're trying to normalize the business, so we will write off the first quarter and second quarter, and really see what the business looks like going forward. Now with restaurants, what you have to understand is some of their franchisees may not make it, and I think that's why you have to be very careful with those. The other related group, and you and I have talked about it before, I think the gig economy companies are going to come out of this harmed, not enhanced. I know there's a body of thought that, everybody will just do food delivery and we'll all take Ubers and no one's going to buy a car again. And I think that the flip side of it is that the labor pool issue for the gig economy companies is going to loom very, very large coming out of this crisis. Keep in mind that we as taxpayers are paying, correctly so, the unemployment benefits for a lot of drivers, Uber, Lyft, Grubhub, and so on. And but the reason we're paying that is because the companies themselves never paid into the unemployment pools. It's the whole idea of keeping employees as independent contractors rather than employees. And I think both political parties are going to be looking at that pretty hard coming out of the crisis to enhance corporate responsibility in lots of different ways, whether it's keeping employees as independent contractors, whether it's restricting buybacks. There's lots of issues yet we haven't thought through about this that I think will make a difference to U.S. businesses.
Well, I want to get it specifically into the Ubers and the Grubhubs and things that you have mentioned before. You did mention Josh's name, and I want to bring him. I'm sure he has a question for you as well. Hey, Josh, you there?
Yes, of course. Hey, Jim. Greetings from the South Shore of Long Island, my friend.
My second favorite place in the whole world, Josh. You know that.
I do. I wanted to just bring up, because I don't know if all the viewers are aware of this, but you've actually taught a class on financial fraud at an Ivy League university, and philosophically, there's a silver lining about recessions and bear markets in that this is the only way we ever really discover fraudulent operators, whether on Wall Street or at quote-unquote blue-chip companies. And every market crash, the second wave that happens after the initial shock that stocks went down, is that we realize that a lot of magicians were really just behind the curtain and not actually performing magic. Right. And you played a big role in exposing Enron after the dot-com crash. You recommended a book to me, The Match King, about the unraveling of a giant multinational corporation in the Depression. And so and of course, Madoff was unmasked by 2008. What happens is people that thought they had returns, the returns were phantom. And when they went to get their money all at once, there just wasn't enough money to give back to people. So my question is, first, I'm sure you consider that to be a positive because these schemes and scandals can't continue to run on forever, and this is when they stop. But the second part of that is, what areas of the economy or the stock market do you think, without mentioning anyone's name specifically, but where do you think the next big scandal will emanate from? What kind of work are you guys doing on that question?
Yep. All right. Thanks. That's a great question. In fact, I'm teaching my class remotely, and this upcoming Monday's case is Ivar Kruger and the Match King, and my good friend Frank Partnoy is going to be guest lecturing at the class. And you hit on one of the themes of the class, which is that the fraud cycle follows the business and financial cycle with a lag. There's the longer an economic expansion goes on and the longer bull market goes on, people's sense of disbelief is reduced. And they begin to believe more things that are too good to be true. And inevitably, when the cycle turns down and people get stingier with their capital, since most frauds today are by and large sort of Ponzi schemes or Ponzi schemes kind of once or twice removed, it gets harder to keep the game going because cheap capital is not available, and the business models collapse. And then we see the wrongdoing. And I've always joked that the best defense attorney and the best prosecutor for a company is its stock price. People don't get upset when they're making money on the upside. They look the other way on bad corporate behavior. The short sellers, the journalists, the naysayers will be pointing out that a guy's doing this, he's doing that, he's obviously lying, and people will shrug and go, so what? The stock's going up. But when people start losing money, boy, do they get upset. And press politically legislators, law enforcement, regulators to crack down. We saw that after the dot-com wave, right, with Enron and Sarbanes-Oxley. So where are the excesses today, and where might the gray area cross the bright line? And I think two areas are really areas to watch out for. The first is the fraud, I think, the fraud that's hiding in plain sight, which is the aggressive and over-aggressive use of metrics rather than GAAP earnings. And we see it particularly in the lavish use of share-based compensation in Silicon Valley, but everywhere, where people simply are paying employees with stock and adding it back to pro forma earnings. Any way you cut it, compensation is an expense. It should be expensed, whether paid in stock or cash. And then I could go on with all the adjustments to EBITDA in the private equity space, and we don't have time to get into all that. But a lot of the aggressive and maybe overly aggressive behavior is staring you in the face in this cycle, and a lot of it on the West Coast. And then if we want to go further west, I think the other area, and we saw it this morning with Luckin, you have to avoid these Chinese companies like the plague. I'm sorry. I mean, I know how many times investors have to be burned in these companies that are just too good to be true, growing at 40-50% a year, with all kinds of odd transactions with affiliates, variable interest entities based in Cayman Islands.
Hey Jim, I want to just clarify some of that because I think it's an important point. MSCI, as part of their index management, specifically over foreign stocks and emerging market stocks, have given China a greatly upgraded role in the makeup of those indices to the point where investors buying overseas stocks increasingly own more China if they're hugging that benchmark. And let's face it, most are. So that's part one. Part two, the exchanges have somewhat blessed investing in Chinese companies by virtue of the fact that many of them are listed on either the NASDAQ or the New York Stock Exchange. So do you see those two things as being part of the risk here for most investors watching us right now?
Well, I think that those are certainly have contributed to investors either love affair or overweight in China, and as well as the idea that now listen, I've been known a little bit as a glass half empty guy in China, to be fair, but the secular growth rate that China reports is awfully attractive to people. If the economy is really growing 6% a year and the rest of the world is struggling, why wouldn't I be looking there for secular growth stories? The problem is that an awful lot of those secular growth stories are manufactured literally for Western investors. And that's the problem. And so we had been as light in China, if you remember, about a year ago when you guys were talking to me, we were as low to the ground in China as we've been in years. We've been increasing our Chinese exposure in our global short funds and global hedge funds because I also see another problem, which is coming out of this crisis. I think U.S.-China relations are really, really have been harmed. And if we had seen some of the activities from China last year that we're seeing now, such as expelling all Western journalists, and really, things like that, a year ago, I think people would have been running around with their hair on fire. But because it's happened in the backdrop of the virus, we've kind of neglected it. But things are getting much, much worse on the U.S.-China front. And if you think about things about corporate supply chains post-virus, and reliance on imported products that are essential to our well-being and national security, I think, and even if you look at the Democratic positions, the Biden positions, and others, I mean, they've hardened as well. And so I suspect that things are going to get worse between the U.S. and China before they get better.
So you're as negative today on China as you were many years ago when you were the loudest voice.
Well, we were one of the only voices. No, we're not as negative as we were in 2010-11. We had about a quarter of our global short funds and hedge funds short China, but we got down as low as 5 last year, and I think we're a little bit over 10 right now.
So let me ask you. You said one thing that makes it hard to stay short is when a stock gets creamed, like some of the energy ones have done and like Luckin has done today, where you've covered it all. The other is when a stock goes parabolic, like Tesla did over the winter. Are you still short that? And how did that impact your thinking on your positioning?
So Tesla, and we told clients in January, February, that the 3-month period, sort of November, December, January, was one of the craziest periods I've ever seen in my 40 years on Wall Street. And if you remember, and I know Josh saw some of this stuff, and maybe some of your other panelists, retail for some reason came pouring into the market in individual names and individual stories in a way we haven't seen really since sort of January, February of 2000 at the end of the dot-com boom. And we saw the parabolas, we saw the Teslas, the Virgin Galactics, and others. And we saw it in the data of retail trading at E-Trade and options and Robinhood and so on and so forth. And I had not seen, that was the one thing that had been missing in this bull market in the 10 years, was just manic speculation by individuals. Well, sure enough, by January, February, we had it. And, we saw these stocks go parabolic. And if you're parabolic and you're short, obviously your position's getting much bigger. So in situations like that, if we like the name, like we like Tesla, we will have to cover some if it goes through our risk parameters, but then we will sell it. Even back down if we want to keep a maximum position. Again, one of the challenges of the short side is that you get bigger when it goes against you, and you get smaller when it goes your way. We are still basically maximum short Tesla. It's still one of my favorite positions. Nothing's changed in my viewpoint here. This is a car company. It will lose money again this year. What I find fascinating about Tesla is that the 2021 estimates, which track the stock on the way up, are now being cut dramatically. I think Tony Sacconaghi, who you know, cut his 2021 adjusted EPS number yesterday from $18 to $11. I mean, that's not affected by the virus. So, I mean, we're seeing big number cuts in this company. They're building 2 plants. They finished China. They're building Berlin. They are increasing capacity, I think, exactly at the wrong time. And if you know anything about manufacturing economics, you know that units, you also need to cover your overhead if you're building more and more capacity. And if you're not producing at 90+% of capacity, you're basically not going to be profitable.
But from a risk standpoint, you did cover some of the Tesla short when your position got larger because the stock had gone parabolic, as we said?
Yeah, we have a 5% limit on our funds. So if anything goes through 5%, we have to cover. But on the other hand, we will add on the way down if we still like the position. And it was a very instructive story, and that was a company called Valiant Pharmaceuticals that went from 130 to 260 on us. And we had to start covering stock at 180 and 200 on the way up. But then we sold it all the way down.
Do you think, though, the fundamentals of the balance sheet of the cash position have improved? You would admit that, though, correct?
Oh, yeah. It's not an insolvency story, at least not here and not yet. But it's also got a market cap, that's $89 billion and an over $100 billion total enterprise value. This is a company that hasn't made any money since its inception and is not going to make any money this year and is not going to have 1 million robo-taxis as it promised this year. And so it's a car company. It seems so simple to point that out to people, but you have to keep doing it. Car companies did trade at 1/2 of revenues. Now they trade at about 0.25 of revenues. And of course, Tesla is trading at 4 times revenues. So the risk reward is I think, somewhat self-evident.
I'm reminded of the Charlie Munger quote from months ago on this. I want to remind our viewers of it, and I know you know of it, but remind you as well and have you react to it, of Tesla. I would never buy it. I would never sell it short. I think Elon Musk is peculiar, and he may overestimate himself, but he may not be wrong all of the time. Is he onto something there about Musk himself and just the nature of the way that this stock trades? It's tough to be a player.
Well, I think that we talked a little bit earlier about my fraud course, and there's a wonderful model we use by a woman named Marianne Jennings, who wrote a great book, The 7 Signs of Ethical Collapse, and it's a checklist of all of the great frauds in history, and it's a seven-point checklist of attributes that all the great frauds have had in history. And all I'll say is that Tesla, I think, checks 6 or 7 of the boxes. And to Mr. Munger's comment, I don't know what that statement really says. I think that statement actually describes kind of almost everybody, right?
It's just that this has been such you could theoretically be right about some, most, maybe all of the things you say. And yet the stock can work against you regardless, right? There are certain things that are a cult type stock. You know where I'm going when I bring up that. So regardless of the argument you make as to whether it is prudent, relevant, or fundamentally sound, it may not matter by the way that the market trades something, whether it's Tesla or something else. This just happens to be the example that we're using and to what Mr. Munger was speaking to.
Well, they're cult stocks until they aren't, Scott. And again, I think that when you price in the cult at basically 16 times where the rest of the industry is trading, it had better stay a cult stock, because there's no margin for error here. And I think that's the opportunity if you're a skeptic.
Jim, you know Rob Sechin. He's with us today, and he has a question for you too. Rob?
Hey, Rob.
Hey, Jim. Great to have you on the show. I feel short selling plays a vital role in market function and keeping management honest, and you're one of the best at it. So thanks for being on. I have a couple questions for you.
Sure.
Do you think investors, 3 questions actually, are looking beyond like you are to 2021? Has that migration begun? That's number 1. Number 2, given the induced coma that we've kind of put the economy into, are you surprised at how well markets have held up? And does that have something to do with cash on the sidelines? Yeah. And, is this ultimately going to be the death of passive investing and the indexification of markets? What are your thoughts on those topics?
I'll pass on the last one. I don't know. I'm generally a fan of passive investing. I sit on investment committees and allocate capital, as well as run my hedge fund. And I'm often the one advocating a big slug of passivity, because for most investors it makes sense. And so I'll sort of punt on that one. A couple of constructs, and again, with the overall view that I really don't know specifically where the market's going. But if you want to think in terms of frameworks, I don't think the market is screamingly cheap here. It's down a lot. But on the other hand, again, we can ignore 2020. But if you look at the S&P, I think last year was about $160 in earnings, give or take. And as we got before the virus hit, I think people were they were bringing their numbers down for 2021 to somewhere around that same number. But that's at a 21% tax rate. And I pointed out to people, in the not small chance that the Democrats take the White House and the Senate, and I know the Senate's much more of a toss-up right now, but if corporate tax rates were to go back to 35%, that $160 is $130, and so the S&P is kind of, all right, it's not 10 times, which is where a lot of bear markets bottom out at 10 times or less. In 2009, it was 8 times the previous peak's earnings. In 2007, earnings peaked out, I think, about $100 per S&P share, and I think the S&P got down to about 600, 650, 700. And that's been also the case in 2002 and go back to 1990. So they're not giving things away here, but they're certainly not as expensive as they were a month and a half ago.
Were you guys, when the market did get hit, pretty severely, obviously 10 days ago or so,
yep.
were you buyers for in the hedge fund on the long side, thinking that the market had gone down too far too fast?
Those 2 weeks ago, when I think about the 19th or the 18th or somewhere around there where it bottomed out, I think I'd have to go double check, but I think we were probably net buyers. Yeah, I'm virtually certain of it. Just because lots of things got down to prices that where the risk reward for what we do is just not there anymore. But then a lot of things snapped back dramatically. I mean, we had some stocks up 100% in the following 7-8 days.
How do you view things like the airlines here or hotels, things that have obviously gotten hit from a stock standpoint and who are going to be facing a lot of trouble going forward?
Yeah, we weren't in the cruise lines or the airlines. We as we're in the casinos, and I just think those are such troubled business models, and you're really going to have to figure out, as I indicated at the beginning of the show, what do these business models look like coming out of this, right? They're disasters this year, we know that. But, airlines, I can give you a pretty educated guess. Airlines are still going to be around. I don't particularly think they're great businesses, but they're going to be around. So you can look in the capital structure and see maybe there's something interesting to do. Cruise lines, I don't get it. I haven't gotten it all along. They're non-U.S. taxpayers. They're flags of convenience companies. They wanted U.S. taxpayer assistance, which was patently absurd in my view. And I think that business is probably permanently harmed. So it just depends. I mean, and what are we going to do as a society? Is this going to be like 9/11, where our lives changed? Right? We gave up small personal freedoms when we traveled or whatever because of security issues. Are we going to congregate as much coming out of this? Are there going to be costs for companies that are involved in dealing with the mass public, that whether it's higher insurance costs, higher health related costs, whatever it might be? I mean, I think investors have to really kind of put sharp pencils to this when they look at business models coming out of the virus to figure out, are my companies going to be permanently changed, or is this purely temporary?
Let me talk more about sort of on the theme of coming out of this, because another company that you've been short is Uber. And Dara Khosrowshahi, the CEO, commented a couple of weeks ago about this very thing. I'm going to read the quote, and we can get your reaction on the other side of it. Our balance sheet is incredibly strong, he said. We have plenty of liquidity on the books, which we think positions us to come out of this crisis, and we will come out of this crisis strong, capable, and important. Now, their bookings are obviously down because of the virus. That's no surprise. But the fact of what he is saying about the other side, do you disagree with him?
I do disagree on one major point, and one of the reasons we're still short all of the gig economy type companies is that I think that their entire business model is based on this labor arbitrage. That basically their employees, their drivers, in effect, are not employees. And that is huge, because keep in mind that right now the cost to keep an employee beyond salary is usually 20% of someone's revenues in the form of payroll taxes, unemployment pool taxes, and a variety of other taxes for employers. And usually the employee pays about half of that. In the case of the gig economy, the employee is paying all of that. And so it's why a lot of these drivers realize they're not making much more, or if not even less, than minimum wage when they factor in all of their additional expenses. And that's why these businesses exist. I mean, you know, the taxi cab business has been around a long, long time. And so I think that if you're a gig economy investor, you have to at least consider the possibility that the entire labor relations aspect of this business model is going to change. And I think that's really important.
And if it does change, as you say, it might. And, you know, I've seen some politicians in Washington over the last couple of days bringing up this very issue related to the virus and what happens afterwards. And the people who are struggling right now, who were driving Ubers, whether it was part-time or even full-time, who are now doing it no time. Yeah. You think it's a net negative, even if that changes the way the company operates after this?
Well, I mean, obviously, I think they're going to have the company's going to have higher payroll-related expenses. And so the question will be then, investors, will they be able to charge consumers more if they do that? And you know, that remains to be seen. But, you know, it's a fundamentally unprofitable business model. And even when Uber says, well, we're going to be adjusted EBITDA positive, you know, I think he said fourth quarter of 2020, not 2021. People got excited. You know, I kept pointing out to people, yeah, that's before share-based compensation, which is running almost $500 million a year. And so are they really profitable if they're not counting that? And so this is the problem. If you look at Grubhub, I mean, just look what they did recently. If you want to talk about bad actors, they did this promotion. They promoted a promotion with their restaurants where they urged the restaurants to offer big discounts and deliver through Grubhub. And then in the fine print, they told the restaurants that they, of course, would not take cuts in their cut. And so, you know, this is somewhat of an almost predatory business model. And for the food delivery guys, I mean, I think they've got an even more existential issue, which is I just think a lot of the independent restaurants, which is where they make their money, they don't make money in the McDonald's of the world and the Burger Kings.
You're still short Grub?
Still one of my favorite positions. And I think that structurally they just don't make money. And here's your tell on Grubhub. If Grubhub doesn't make any money in the first half of 2020, I would argue they're probably never going to make money.
They did give us a statement, by the way, because what you do say about this so-called Supper for Support program that the company was running is in fact true. The price of the discount that Grub was saying falls on the shoulders of the restaurants, not Grubhub paying the discount, as it were. They say, and I'm just going to read this for our viewers, they say since it launched, participants have seen 30% more orders on average. And so because it is working well for those restaurants, Grubhub is doubling down on the promotion and encouraging more signups by giving $250 to each participating restaurant. Based on the results so far, we anticipate this funding from Grubhub will help generate at least $100 million in restaurant sales and cost to Grubhub of approximately $30 million. We did ask them for a statement about this program, and that's how they did respond, Jim.
Yep, well, they were caught out in it, and I don't think that when they made that announcement originally, they had that program. So I think they've gotten lambasted on social media and the press and by restaurants for doing that when they rolled it out. So good for them if they're going to try to give that back. But it still gets to my problem, which is I just don't think this is a profitable business. And where they are getting higher delivery through the fast food outlets, Grubhub themselves said they don't make any money in that business, delivering burgers.
Is there a way, though? I'm just wondering, sort of on the other side. Forgive me for interrupting you. I'm wondering on the other side of this, if the world does change to some respects. And I think we all think that in some ways it will. What if, you know, look, there was a talk about a possible deal for this company months ago, which, you know, to some may have sounded outlandish in the suggestion of, well, who would potentially buy them? But if you look down the road and you do see the world and habits changing in some way, is a company like this more attractive to a bigger player because people will, in fact, want delivered food more often than going into a restaurant, and restaurants may be half the size in some cases on the other side?
Here's the conundrum with that question, Scott. If you don't make any money delivering for the big chains, which is where a lot of the volume is, and you're only making money delivering for an independent restaurant, and independent restaurants survive this, coming out of this, why will independent restaurants ultimately not do this themselves and just pay an agency fee? Why do they need to give up 20% of the take to a third party? This has been profitless prosperity for the restaurants in good times, and it doesn't scale. Delivery guys can only do 2 deliveries an hour. It's not like other Silicon Valley network effect companies. It's literally a body shop. You have to have more drivers to do deliveries, and that's the inherent problem why this is never going to be profitable.
Let me. I'm sorry. No, I was going to say I wanted to bring in another one of our panelists to get a question in. We're running through time so fast, as often happens in these interviews. Jenny Harrington, do you have a question for Jim?
Sure. Thanks, Jim. I'd love to circle back to one of your earlier comments where you said you took your shorts in energy off in the beginning of the week. If you took your shorts off, it would presume that you expect there to be upside from here. So I was curious if you're exploring any purchases in the energy space and if there's any theme around that, either company specific or micro industry, where you're actually finding value and think that there could be upside.
Yeah, I mean, I've not been a fan of Scott Knows for a long time. I would tell your viewers, avoid the frackers. That's a simple blanket statement, long or short. Just avoid them. They incinerate capital. It's not a business. It's a scheme. More money has gone into the ground than has come out, and so we've been negative on that space since 2014. We remain negative. It's difficult because right now it's such a play on the commodity price, even for the integrateds. And I haven't done any work recently on the pipeline, so I'll avoid that. I know some value people are nosing around that sector, but even the integrateds, who just had just ironclad balance sheets. Remember when Exxon had an ironclad balance sheet? It doesn't anymore, and nor do the other majors who paid big dividends and generally were pretty conservative holdings for investors. So it's a tough area. I think it's going to get tougher. Balance sheets have deteriorated, not gotten better. And then you have this whole problem where the fracking business model isn't really just a business model. It's an accounting scam. They never depreciated the wells fast enough. And so, by and large, the stocks had come down so much, the risk reward was kind of gone on the short side and better elsewhere. But I'm not a big fan of the industry.
Jim Lebenthal, you have something for Jim?
Yeah, if I can just start off by saying, as a long equity manager, I have a lot of respect for short sellers. I know that's not only what you do, Mr. Chanos, but it helps in price discovery. It's real money that you have at risk. And when I'm entering a position, if I believe in the position, one of the metrics I look at is what's the short interest? Because as you pointed out, you have to cover at some point in time. So if there's no accounting fraud, short interest can be very helpful. But my question to you is, we're living in this world where every day something's coming out of the federal government, whether it gets enacted or not. Yeah. And as an example, one of the things that's being talked about is maybe we get an infrastructure bill. That wasn't really talked about a week ago. The question is, you have real money at risk on the short side, and losses can be infinite if things go awry. Are you in any way overly worried about any given morning there could be something coming out of the federal government that dramatically changes your investment thesis on the short side, and what do you do about that?
Well, again, we're in our hedge fund, we're net long, as I indicated, and in our short programs, for the most part, we are compensated on how we do relative to the market. So I've always joked I'm in the insurance business. I don't think I'm short any companies right now that would be directly benefited by an infrastructure bill. And as for government involvement affecting the stock market, at this point in my career, I'm pretty much resigned to the fact that there's always going to be government involvement in the financial markets. It seems to be getting worse, not better, as it relates to the government deciding to spend taxpayer money to support various different industries. Now, an infrastructure bill is probably overdue. It should have been done a long time ago, given where rates are. But we always worry about that kind of stuff, and the government is increasingly of the belief that it needs to rescue various industries. I would point out, to go back to the airlines, on Monday, I pointed out to clients that the airlines, the 4 or 5 largest publicly traded airlines in the United States had a $50 billion total market capitalization in equity. Why are we talking about equity grants? If Carnival Cruise Line can raise money in the debt and bond market and equity markets, why aren't American Airlines, United Airlines, and so on raising equity in the stock market? Why does this taxpayer need to do that? And that's just a philosophical issue I have, which I think we probably don't need to get into. But yeah, Jim, I mean, we always worry about that stuff, and we're always, can the government do something in an area that we're negative on that would affect valuation and perception? Sure.
You're obviously not the only one, Jim, who is looking at the current landscape of bailouts and rescue plans and taking issue with certain parts of them, obviously. Josh Brown, I know you wanted to get in earlier, and we are running out of time. What do you have?
Well, real quick, I think the answer to why the airlines aren't in the debt markets right now might have to do with something they're discussing with Omaha, but we'll find out. I want to push back on Uber. I'm long the stock. I don't disagree with everything that you've said, but here are 3 things the bulls would say back to you. The first is, unfortunately, the pool of available labor for Uber drivers is now substantially bigger, given the unemployment numbers that we've seen in the last 2 weeks. 2, mass transit might be more at risk than Uber coming out of this. How many people are now thinking about, well, how am I going to get to work from now on if I no longer want to be on a commuter train, a subway, or a bus? So they might actually benefit at the margins for middle class, upper middle class commuters. And then the third thing is, I'm not so sure that there will be the political will to change the employment structure for companies like this. And one example of that is they're now including self-employed people in the unemployment insurance package that's coming from Treasury, sole props. They're going to treat them as though a company laid them off. So it almost seems like they're being entrenched. What would you say to those 3 points that a bull might make on Uber specifically? And I own the stock, by the way.
Okay, well, so in reverse order, I think that you're actually making my point. I think that employers will be put into those pools. That is, I think that because we are covering these drivers and self-employed people, as I think we should, I think that employers should be paying half those costs as CNBC pays half of Scott's and Kinnico's pays half of mine, and that the employee should shoulder the same amount, whether he's an independent, quote unquote, independent contractor or not. So I think that the cost of doing business from a payroll point of view from the Ubers and Grubhubs of the world is going to go up. Now, skipping to the first part of your question, will the available number of employees increase? Well, if unemployment becomes structural, possibly. But if unemployment becomes structural, I'll cede that point to you, Josh, and figure out that a lot of my other companies are going to have much bigger problems. I'm assuming that the unemployment will not be structural, and that we will get a bounce back, and therefore labor rates are going to stay the same or maybe even rise. And so I think that the unbridled capitalism, where everybody's going to fight for these minimum wage jobs, I think could in fact see additional regulation, not only on the payroll tax side, but in restrictive minimum wage and other things. So I think we just disagree on that front. As to the second point, I think that's the interesting one. I've heard both sides of saying, I'm never going to take mass transit because it's just, it's too many people and too confined to space. And then I've heard I don't want to get in someone's car. I don't know who's driving me. I don't know what whether they cleaned the vehicle, who's been in it before. I'm definitely less than 6 feet in that vehicle. And so I don't know. We'll have to see how that plays out. The problem, again, in this industry, though, is at the micro level. It's not economic. That these are body shops, quite literally.
Let me. I only have a couple minutes left, Jimmy. Yep. I want to ask you one more question about a stock, if you will, that you're very long. Ticker symbol is Joe B, as in Joe Biden. How is this all going to impact How is the virus going to impact his ability to campaign? We already know, literally, we came on the air today, the convention announcement had come out that it's being pushed back. How is that all going to impact him? What are your thoughts? Have you spoken with him recently?
I've not spoken with the vice president very recently, but I've certainly spoken with his team and have been in touch with the campaign almost every day. As you know, I'm close to the vice president. I think stepping back before I talk specifics there, and I don't know a whole lot more than what the public knows, I would say that I think the political dynamic will change. And I suspect as the virus subsides and or vanishes, hopefully, I think that the discourse is going to get a lot sharper and the elbows are going to get a lot sharper. And sadly, they've already been pretty sharp, as we know, right? But I suspect when fear turns to anger, you're going to see a different dynamic in a lot of races around the country. And that's why I'm kind of keeping my eye on the Senate races as well. Look, the convention, I'm a Milwaukee native. I was looking forward to the convention this summer and hitting up a few Brewers games and eating some brats. But we'll see what happens there. I think that there will be a stark dichotomy between the two candidates and the two parties, probably more than ever coming out of this in the fall. I don't think the markets are focused on that right now. I don't think the markets are focused on the healthcare debate, which I think will kick back in terms of our healthcare economy and what should be provided and what shouldn't. I suspect the virus might even blur the lines between the parties on some of these issues, on things like employment and healthcare. And so it's going to be I think it's going to be kind of a wild and woolly fall. And we'll see what happens. I think the vice president has correctly been mindful of where we are and is not trying to make big political points on it. I think that's the right strategy. But I also think that the administration will be held to account when the time comes. And so I suspect the political rhetoric is going to heat up post-summer. That's about the best I could say.
I understand. I really appreciate you being with us today. It's been a while, and it's always an interesting conversation, discussion, and debate. Jim, thank you so much.
I'm so happy that you invited me on. Guys, stay safe, everybody. Josh, we got to do a steak soon.
Mm-hmm. You as well. Jim, you be well, stay safe, and stay healthy for certain. That's Jim Chanos, the Kinnikos Associates founder. Guys, we kick it around on the desk in the few minutes that we have left. So, Rob Sechin, your takeaway from what you heard?
Listen, it's more of a market takeaway. It's clear there's very little certainty. Economic and profit data are shifting beneath our feet. The stats are very grim. They're in our face every day. I would say don't let the worst case become the base case. It's smart to be prudent and cautious. Don't be paralyzed. Take advantage of what you know. Act on what you know. Take tax losses. Focus on companies with competitive advantages, earnings stability, attractive valuations, and do things that can better position yourself for when you come out of this and markets start to look beyond, which is what Jim said he's doing, 2020 and into 2021. And that's really how we're approaching it. And I think what investors should take away from this.
Yeah, it really is. It's hard, whether you're long or short, to analyze anything because you just don't know what's going to be what and when. Jenny.
So I think that's exactly right, because we don't know how to analyze it right now. But what Jim said was super important. He said that basically we're writing off 2020. And at this point, as an investor, you need to look out to 2021. 2020, no one knows how to analyze it, but that shouldn't let you freeze in your tracks, or that shouldn't make you freeze in your tracks and not do anything. You need to be proactive. You need to look forward. Jim said something really important too. He said he glances backward and he looks forward. We need to do that. Make sure we're well positioned, but look forward. And he also made a really good point about fundamental analysis. This is a time where fundamental analysis can totally shine where whole sectors are thrown out, and we have the opportunity to dig in and find great things to buy right now and great things to invest in. So I would say write off 2020, look forward to 2021 was my biggest.
It's interesting, though. You were adding to the energy stocks, Magellan and Williams, at a time where he covered the last of his energy shorts.
specifically, those are pipeline companies. And when Jim was going through what he wasn't willing to buy, he specifically said, I haven't looked at pipelines, but I've heard that some value investors are starting to. There's a lot of value there. And there's also a huge degree of immunity from the overall price of oil. And so there's opportunity in the pipeline space. If we were going to do final trades, I was going to use those.
Okay, that's all good. Jim Lebenthal, so you've raised a little, I emphasize, more cash. You're now 7% cash by virtue of trimming from where?
The relative outperformers, Goldman Sachs and Intel. And look, the 7% cash is my way of holding two incongruous thoughts in my head at the same time. One is, yes, look to 2021. We'll come out of this, and you should be looking at those companies you want to own in 2021. But at the same time, acknowledging that we're in an incredibly heightened sense of uncertainty as far as how long this shutdown lasts and what earnings estimates should be. In that sort of uncertainty, I do think there will be a few bites at the apple in the next couple of weeks to buy stocks that I'm going to like in 2021 at prices cheaper than they are now.
Guys, I appreciate all of you being with me today. I do want to just touch the markets before we get out of here in the minute or so we have left. The major averages are holding on to all of their gains right now. The Dow Jones Industrial Average is up 345 points. That's 1 2/3%. S&P 500 is up more than 1 3/4%. You see the NASDAQ at the bottom of your screen there. Really, that incredible move that we saw in oil, too, is worth focusing on. That after, it was first our Joe Kernan coming on and saying that the president was looking at a 10 million barrel per day cut in production or increase in cut in production, excuse me, from Russia and Saudi Arabia, which the president then backed up in his own tweet. It appears a little more nuanced than that. It may.
I mentioned crude. That is going to be the huge story of the day, and it is the driver of the action. Right now, it is up 25%. The energy sector, as you can see, there's up nearly 10%. All of this after the president told CNBC the Saudis and Russia will ease pressure on oil. We're going to have a lot more on this in just a moment. We should note that despite this rally, crude is still down 46% in just the past month. And the rally in stocks today comes despite the massive jump in weekly jobless claims to 6.6 million filed last week. That's a new record. We've now had nearly 10 million claims in the past 2 weeks. Only about 11 million were filed in all of last year. So a pretty shocking increase. For more on today's market moves, let's get straight to Bob Bassani for what he is watching. Bob.
And the key here is it's nice to have something besides coronavirus move the markets. The jobless claims numbers, high as they were, didn't really dramatically move the market down. Initially it did, but we came back. It was when the president commented on the expected oil cuts in the production in Saudi Arabia and in Russia, with whether that's going to happen or not, but that's what moved the markets. And if you took a look at the major sectors here, energy far and away is the leader. Utilities and banks have bounced back after a brutal 6% decline yesterday. That was nice to see. We see REITs are underperforming and retail stocks are also underperforming. I think this is probably because of some of the guidance and commentary that we gave. Let's look at some companies that are either suspending or saying they're not sure what the guidance is. Kimco Realty, one of those companies out there, big shopping mall owner. They have an ownership position in Albertsons. They're suspending guidance. So that's weak. Walgreens said they're not in a position to accurately forecast the future impact of coronavirus. That's sort of indicating guidance isn't very good. Shopify, Brinker, which does Maggiano's, and Stanley Works, Black & Decker also suspending guidance there. Most of them down except Stanley Works. Just want to finally note the energy ETFs, really huge volume today. Volumes are generally down across the board on the ETFs compared to what we've seen recently. But there's the U.S. Oil Fund USO, which is oil futures, and the energy and oil and gas exploration are equities. Huge volume in those today. You know, it never fails. They always think there's some kind of bottom in oil, and they always get killed. The story's now 4 or 5 years old, but there are people who are trying to figure out whether $20 might be a bottom for oil. Back to you.
Okay, Bob, thanks. Let's zero in on oil for another moment. It's having its best day on record, and if we settle at more than 23.8%, that'll be true. We're up 24.5% right now. All of this after the president tweeted and told our Joe Kernan that he expects and hopes that Russia and Saudi Arabia will be cutting back approximately 10 to 15 million barrels of oil. Now, we have several energy executives headed to the White House tomorrow, where sources tell CNBC they won't be lobbying for a direct bailout, but instead lobbying for relief from drilling on federal lands, among other things. For more on where the price of oil could go from here, I am joined by Dan Yergin. He's vice chair of IHS Markit and author of the upcoming book, The New Map, Energy, Climate, and the Clash of Nations. Brian Sullivan is with us as well. Brian, let me just start with you, because there's been a lot of headlines this morning, but what do we actually know?
Well, okay, Kelly. Hi, Aaron. Hi, Dan. Listen, I just been going back and forth minutes ago, literally, with somebody inside of Aramco to talk about this a little bit. And it's very clear that, and not taking anything away from the president's tweet, because he was on the call and he knows what they said, but, and I'm sure Dan would agree with this, 10 to 15 million barrel a day cut from Saudi and Russia together alone is simply not possible. It's just not mathematically possible. The price of oil didn't go up 50%, so they would still come out worse. And they said, this is what I got from somebody inside of Aramco a few minutes ago, any 10 million cut or more must include U.S. producers. So I don't know if they were saying that, like, mathematically it must, or they're going to insist that it must. But here's the reality. You're not going to take half of Saudi and Russia production offline. They just couldn't. No country could actually even physically do that. It would have to include the U.S. producers. And my guess is tomorrow at the White House there's going to be a, you know, you guys need to roll back your production kind of conversation.
Brian, let me jump in there. I have a piece, Kelly, I don't know if you have it yet, that just went up on foreignaffairs.com on this subject as to what's actually happening. I think the president is famous for being a deal maker. I think here he's doing divorce mediation, getting these two countries together. But as Brian says, that even if you rolled back what they had, the increases, it's not clear the Russians have increased, the Saudis are increasing, and some others are. It would be maybe 4 million barrels a day. What we're looking at in the month of April is a 20 million barrel a day decline in demand. And as Brian said, you're not going to get the cuts out of just those countries. And there's no real way the federal government has to, it's not like, Saudi Arabia can't just tell oil companies to cut back. So I think that's where the puzzle is. We think, at IHS Markit, our view has been that we were going to see a 10 million barrel a day decline because producers are going to have to shut in because they can't either get their oil to market, they can't get into storage, or that the price in the marketplace is less than their operating costs. But of course today, with the price up, it looks a little brighter for the producers. But there's still the question that sometime in late April or early May, we'll probably run out of storage unless there are not major cuts.
Plus, Dan, the price is only up today on reports that you say aren't possible.
Well, I think, as Brian said, certainly those two countries are not going to, they can't do it. But, Russia is having trouble placing its barrels in the market, and so production sort of goes down anyway. So, but I think that the sign that, this is a turnaround in production, in viewpoint of the two countries. And obviously what's really new is the engagement of President Trump in this.
Right. And Brian, I thought the interesting thing, too, is this reporting that's on the wire from Reuters in the last several minutes where they say the U.S. government is not necessarily looking to impose any kind of quota. I don't even know if they could do it. You said yesterday, it's against the law in the U.S. for these companies to get together and agree to cut production. I don't know if it'd be any different coming from above. But, Brian, if they cut production because they have to, I mean, even if we're not officially announcing, hey, we're going to have this cutback, are we effectively going to have that situation anyway? So, it might not be official, so to speak, but is it a wink, wink, nod, nod? Hey, if everybody's kind of not able to keep producing what they're currently producing, at some point that kind of supply is going to come off the market.
I guess, but the one thing everybody's got to remember about this is that shutting in a well is expensive. I mean, smaller producers, it would be cheaper for them to continue to pump oil, losing money every barrel, because the cost of actually capping or stopping the flow of a well can be $50,000 to $100,000. It's not like you just turn the water off on a sink. Now, there are some ways to do that, but the point is it's also expensive to do the other thing. And you're right. Can the government say you're going to cut your production by this much? I don't think so. I mean, it seems like that's a cartel, which, by the way, there's an anti-cartel bill called NOPEC going in Congress right now, sort of ironically enough. I know that two big Texas producers, Parsley and Pioneer, and we had CEO of Pioneer on last week, they're asking Texas to basically impose quotas on production. But to Dan's point, it's not about supply. It's about demand. If we drop off 20 million barrels a day and the refineries stop pumping, buying oil to produce gasoline because nobody needs it or needs jet fuel, where is that oil going to go?
Right. And the Journal yesterday had a great editorial where they explained that if you impose quotas, you benefit the weaker players, hurt the stronger ones. The Texas had gone down this road before. They said they shouldn't go down it again.
Well, they had. In fact, they did this starting in the 1930s when oil was going for 10 cents a barrel. And the last time they did it, however, was actually 50 years ago, half a century. So you don't have anybody there who even remembers how to pro-ration, as it's called. But I think other countries are kind of going to look at Texas, because remember, Texas produces 40% of the U.S.'s entire oil. But I think that there's this is a very controversial thing to do that. There's people on both sides of it, and as Brian says, the companies themselves can't get together and do this. But the states are the ones who actually have authority over production. There are other things the federal government can do to ease the pressure on the companies economically. But
and it is interesting, Dan, if you don't mind, I just want to get you this last point from you before we have to move on. But reportedly, the companies are not looking for some sort of direct bailout. In fact, they seem to want relaxed permits for drilling on federal lands, for instance, which, if the idea is to have less production right now, I
think what they'd like is royalty relief, and I think what they'd also like is some of the restrictions on shipping to be of what's called the Jones Act.
Jones Act, yeah.
Jones Act. Move oil in ships up the U.S. coast, and that would improve the competitive position of U.S. oil vis-a-vis foreign oil. Others want tariffs, but that could backfire because the U.S. is actually an exporter of 8 million barrels a day of crude and products. So
if they get relief, Dan.
Yeah, and by the way, I'm going to jump in on that too.
Go ahead, Brian.
Everybody's like, let's tariff Saudi oil. We're still importing 6 million. Okay, maybe we do that to save America, but I do need to remind you that everything is connected. If we tariff Saudi oil, and I'm not saying we should or shouldn't, the Saudis, who are like the number one buyer of U.S. military equipment, might go find another supplier for that. So now the defense industry will probably be out of their mind because the Saudis will say, well, if you tariff our oil, we're going to stop buying $100 billion worth of your fighter jets and missiles every year. So you got that. Dan knows more about that.